All right. All right, I know I'm starting a little bit late today, chat, but yeah, we got super micro semiconductors today. Amazon earnings, a bunch of other big ones, to be honest, here, chat. So we're doing our best to get rolling here. Forgive me if I'm late. We got a bunch of stuff going on my end. So get this going on. Amazon. We got Amazon. We got super micro semiconductors today too. So again, Amazon is currently at about 180s here. We got super micro semiconductors, AMD, big one today too. Super micros at 860s. Hey chat, but yeah, we got super micro semi. Let me mute this, and I'm gonna do a poll asking which stock are you most excited for after the closing bell? Amazon, AMD, super micro semiconductors, something else. /C results. All right, so again, vote on that poll. Let me know what you guys think. We'll get some music playing here as well. All right, we are here. Amazon's the largest company without question, right? But again, we got AI, AMD, super micro today. A lot of big stuff. AMD is a strange one. I feel like they're behind expectations, but also some really good outlook. Yeah, I mean, they're interesting. Bullish sales expecting. Yeah, we'll try to put all the expectations up here. So again, like Amazon is expecting 81 cents profit per share. EPS on revenue of 142 billion. We'll do super micro is expecting super micro is expecting 579 EPS. On rev of 4.01 billion. AMD is expecting 61 cent profit per share. On rev of 5.42 billion. Do these. Yeah, so all will be covered after the closing bell. Alright, so there we go. So there's the full list. Thoughts on Meta. I'm in Meta right now. Still. It's sideways today. Let's look at our votes. So Amazon's got most people looking for it, which you know. With Nvidia stopping their hiring, I wouldn't expect too much from both. Yeah, but I mean, to be fair, Yair, you've been pretty bearish overall. I mean, for the last couple weeks or month or so plus. And so you not expecting bullish action is not a shock, not a shock. And it's all good. You can have whatever. You might be right. You know what I mean? I'm not even saying you're wrong. I'm just saying, not a shock. Yeah, I ended up cutting a lot of my Intel and SoFi positions today. I'm still very green on the year. But yeah, I ended up cutting a lot of those. It was just unnecessary to hold them. Like, we're already green. Snapchat's doing good, but will Amazon talk about AI is the question. I don't know. I think it'll be fun to see if they do. The problem is, like, Amazon earnings is like 8:30, or is that 5:30? That's just so long to wait. And I guess we will. Yeah, I mean, I'm in Meta. I bought it after it had that big dip a few days ago. My average price is 412s, and so that's treating me really nice and like doing well for that. And so yeah. I mean, what interest in AMC, Sam? You know, I don't really have much interest in it. I mean, I'm holding a position, and I've been in it, and I'm certainly losing in the position. But like, I don't really have any super big interest in it. Not anything like it. I'm not risking anything too major, I guess, is the easiest point with it. I never was. It's not like I'm going super heavy into it. And if I was going to, I probably would right now. I just don't know if I trust it enough. If anything, I think I've been probably more bearish on AMC than anything. I think that, you know, the ape community has been one of the jokes of the stock market, because they've just been wildly wrong. Like, regardless of which way you side there, they've just been wildly wrong. And instead of looking at it objectively and saying, hey, movies theaters in general are struggling right now, they blame it on manipulation and hedge funds and all this stuff. And I'm not saying they're not somewhat to blame, but like, not looking at AMC objectively is I think is ridiculous. I think you got to look at movie theaters as a whole and understand that they're struggling. And when you give them that argument, you tell people that in those communities, they just get weird. Like, they end up just kind of getting emotional and just kind of lashing out. And so, yeah, I don't know. You're holding it still? That's my only point. Yeah, but at this point, I'm down so much that, like, you know, I could sell it. Honestly, it hasn't really. It's just an insignificant part of my portfolio. I'm holding it just in case ish happens. But if it does have the chance to squeeze, I've rodden it down enough to make a little bit from it. And if it doesn't, it's not going to be anything. I guess good risk reward is the easiest part. But AMD not expecting much increase in revenue. Yeah, I mean, AMD expecting revenue of 5.42 billion. You know, in terms of semiconductors, AMD has had a really good year, but they've been pulling back a lot. So AMD was at 220s in March. They're now at 160s. They hit 150s, under 150s. And so AMD's down. It's been pulling back a heavy amount, more so than like NVIDIA on a long-term chart. You know, NVIDIA's held up better than AMD has, and so you got to question whether there's some deep extension in there. I don't know. I guess the logic of this trade goes like this, right? Okay, so a lot of people think markets go like this, in my opinion. I think this is the biggest thing people get wrong in stocks, in markets in general. What I'm about to show you is the biggest thing people get wrong, okay? So we can do it on both sides, right? But let's just look at it from the downside, okay? So say a stock has gone like this, right? What do you think you should do in that situation? You know, a lot of people are going to say, oh, you should sell. It looks weak, right? With my type of trading, the way I'm looking at it is like, hey, it's dropped so much. We might start to find some value there because it's so low, right? This is what I do with a lot of different companies. This is why I bought Meta a few days ago. If my average price on Meta is 412s, you know, I bought it after the big dip. Everybody else was saying it's the end of the world and Meta is going to just get destroyed and all this different stuff. I bought it. My average price is 412s. And so I guess fearful when others are greedy, greedy when others are fearful is a real thing. Now, AMC's different, of course, but I guess the point is, like, it's down so much, I might as well continue holding. It's a relatively insignificant part of it for me. Like, I'm not going to sell it just off of principle. Like, maybe if it squeezes and maybe it might have some value at really low prices. People are still going to the movies. Dune, I'm pretty sure, was pretty successful as a movie. And so, it's down enough, maybe it'll bounce. If not, it's all good. It doesn't matter too much. Same thing goes for the top, right? Like, a lot of times stocks will go like this. And then what do you think you should do? A lot of people say, oh, it's strong, you should buy it, right? But at that point, it's extended. It'll come back down, Same thing with stocks dropping down. Everybody's saying, oh, no, it's so weak. Like Meta, a good example. If we look at Meta here, and a lot of people saw this and they said, oh, Meta's so weak, I'm never buying it. I'm sitting there like, hey, value time. It's time for value. And we buy it up and, really good value at that. Went up to 450s very quickly. And so when we took a little bit off and now we're sitting on a smaller trade, but our average price is 412s. So I guess you got to look at extension and analyze that. And maybe we could argue that it has some objective value or it's always subjective, but maybe you could argue there's some value there for AMC. If not, it's not going to hurt me enough to worry about it. Momentum is a proven indicator, though. Momentum works. Catching momentum is easier said than done, though. So like everybody says, oh, momentum. I disagree. I think it's easier to buy pullbacks, and then ride stair-stepping long-term good trends, right? Like Meta, the easiest way to put it is if you look at Meta here and you put up like a daily chart. I'm not going to buy it up here. You know why? Because there's so much risk to doing that. It's up so much. $500 a share from 220s doesn't make any sense. The risk is too high. Instead, wait for a healthy company that's been trending well to pull back some instead. Ride the trend. It makes much more sense. Your risk is less. If it does drop, it probably has less downside room. And if it does bounce, you make money. That's the way I do it. But yeah. I guess, you see stocks gap up a lot. And a lot of people are like, oh, it's gapping up. It must be strong. Even day trading. I'm looking at it like, hey, it's already up freaking 10%. You think it's going to go up more? Probably not. And I think that's the difference between experienced traders and rookie traders. Because I think rookie traders have the mindset of like, hey, something's gapping down. Let me short it. It's so weak. Let me short it. No, if something's gapping down, I'm buying it up. It's value time, But again, everybody's different, and you could probably make money on both sides of it. You just gotta be smart, I guess. Yeah, all good, Sam. Which indicator is the most important? That's price. I don't price, extension, fundamental health are all, I don't know if you call those indicators. They're indicating something. They're indicating the price per share. They're indicating, extension. They're indicating health. They're all indicators, I guess, if we're using the most broad sense of the term. But yeah, I personally look at extension short term and long term, and then I look at company health. When I buy up anything, they're always blue chips or mid caps. I'm not really ever buying penny stocks, number one. Number two is that if I buy up anything, I have the same thought process that goes through my head every time, which is like, number one, short term extension. Like, where's it gone over the last 6 weeks, 7 weeks, 8 weeks, 3 months, whatever, if it's down a lot in an otherwise healthy trend in a healthy company, then that, checks the first box. I'm like, okay, this fits that condition. The second thing is, what does the future outlook look like? You got a lot of companies that can and do go obsolete. Tech companies that just fail, mid caps that are up too much, that are overhyped, that are never going to hold. we look at like PE ratios in that regard, looking at company health to check the other boxes after that. Like, what's the company health? What's the PE ratio? Stuff like that. And what's the guidance look like? You combine all those things to get a good understanding, but sometimes something's just down enough to where I'm going to be willing to buy it. But everybody's different, I think. Cannabis stocks? No, not really. Cannabis growth. Whoa, what happened with cannabis growth? What's going on in cannabis news? Ooh. So USDEA will reclassify marijuana and ease restrictions according to sources. Please do it. A lot of people are speculating on it. Good, dude. Let them freaking do it, bro. I don't care about politics or any of that stuff. Let them freaking do it, man. It's time. All right, so again, the agency's move confirmed to the AP on Tuesday by 5 people familiar. Wow, this is great news. The DE will take public comment on the plan to move marijuana from its current classification as a Schedule 1 drug alongside heroin and LSD. It moves pot to Schedule 3 alongside some other stuff. I mean, this isn't really going to do that much, though, to be completely honest. Like, okay. Right? Like, okay, let's look at this objectively. All right. So say you're getting say as politicians, right? I'm not talking about anybody specific here. We're just going to throw some general what ifs out there. Say you're a politician, right? And say you get a lot of donations from pharmaceutical companies that do not, like, the one thing they do not want is recreational cannabis legalization. Why? Because recreational cannabis legalization will almost certainly cause less people to need their synthetic, hyper addictive, physical withdrawal causing drugs, right? So what are you going to do, right? You got to do whatever you can to make sure it doesn't get recreational approval. All right, so the first thing, you're getting a lot of pressure from different sides. Pressure, legalize. What are you going to do? You might do this, right? This isn't making it any more legal than it was. Right, this is just reclassifying it. Like, instead of being a super ridiculous classification, now it's just a less ridiculous classification of it. It's still illegal, but by doing so, you're gonna appease enough people to where maybe they leave you alone about it, right? Like, I think that's kind of what's going on here. Again, I'm speculating, but it needs to be. There's a lot more that needs to be done. It's not synthetic. Paralegal, Beagle. It's not synthetic. So Delta 8 is a derivative of cannabis. It's found naturally in cannabis plants. It is an isolate, and so it's a natural occurring thing in cannabis, right? So for people that don't understand it, Delta 9 is illegal. It's classical weed, right? It's what's illegal. It's called Delta 9 THC. Now, in a cannabis plant, there's all these different chemicals. There's all these different things in them. There's CBD, cannabinol. There's Delta 10. There's Delta 8. There's Delta 12. There's THCA. There's THC. There's all these different chemicals in a cannabis plant. Only one of them has been classified as illegal, which is Delta 9 THC. But a lot of them do basically the same thing. And so what people said was like, okay, well, if Delta 9 is illegal, they're isolating some other particle of it, or they're isolating some other chemical in it, maybe Delta 10, Delta 8. Like, they're all doing virtually the same thing. And they're saying, hey, well, let's isolate this. And then, that's what you're getting with those. They're not synthetic. They're not man-made, which is what synthetic means. They're isolates of naturally occurring chemicals in cannabis plants, is what it is. Are we bullish on AMD and Amazon? I don't know. Amazon has had a good run this year. It's up a lot. If you look at the long-term graph of Amazon here, it's doing better than AMD has. AMD's pulled back a little bit more. Now, Supermicro Semiconductors has been crazier than all of them, but it's still holding fairly well. It's up to almost $900. And again, we'll see what happens. But you got a pretty good handle on a lot of topics, my brother. The nice. Hey, thank you, man. We try over here. Stay educated. My theory, Amazon had 3 good earnings back to back, and I think a dump today for earnings. Well, yeah, I mean, it can be derived from hemp. At this point, what they've done, like there's a lot of loopholes out there right now. So they can isolate Delta 9 THC, which is the illegal one, but the rule is that it can't be over, I think it's like 3%, or it might be 0.3% of the plant overall. And so what they do instead is they isolate it from a CBD, and it's still Delta 9 THC, but it's from CBD. There's a lot of ways they get around it, to be honest. I'm not saying I agree with any of them, I'm just kind of, that's what it is. I had somebody proposition me for a business from this stuff, and so I learned a little bit about it in that regard, but all right. Amazon is at 179.30s. Supermicro at 850s. Yeah, I covered a lot of my Intel position. I still think it'll probably work well. I think Intel will eventually bounce, to be honest, but who knows when and what that's going to look like. Yeah, the bank. Yeah, it does help them do, like, specifically lending is the hard part because it's scheduled as having no accepted medical use right now. Lending for cannabis products is non-existent, and so this will help. This will help grow the sector in general because of that. But yeah. One thing I noticed in people research using herb is that most will end up trying other drugs. Mind gets weakened over time. That's not why people end up trying other drugs from cannabis, right? The reason people try other drugs from cannabis is because it's illegal, right? Like, you got to go to a legal drug dealer to buy it. Eventually, legal drug dealers very rarely sell one specific thing. They usually sell an assortment of different things. And so the reason cannabis is a gateway drug is 100% because it's illegal. Because you go to the whomever it is, and eventually they're going to offer you some other stuff, right? Boom, gateway drug, right? But it's not because cannabis somehow just makes people want to do all this other stuff. It's because you got to go to an illegal drug dealer to buy it. If it was legal and sold at dispensaries, you wouldn't have some sketchy dude trying to sell you other stuff, right? Teenagers are, dumb, and so they're more willing to try that stuff. But if you went to a licensed dispensary, that problem's gone. Keeping it illegal makes it much worse. It makes it a gateway drug, but that's an argument that nobody wants to hear, really. Supermicro Semiconductors at 865s right now. 865s. AMD at 150. We'll see if it holds. Supermicro is the one that has the chance for the most volatility, just because Supermicro has a very, very small float. And so in that situation, it has the potential to move a lot more than Amazon or AMD. Yeah, they always say it's leaked. It never is, to be honest. Somebody's always telling me some economic report or earnings report is somehow leaked. It never is. It's never leaked. It's never leaked. I don't know why people say that. I think a lot of people are trying to pull buyers and sellers of stocks in all these different directions, and I think that's one of the ways they catch people is they say, oh, it's leaked, and then somebody says, oh, well, it leaked good numbers, let's buy it, and then they talk people into buying it up. But it's almost never leaked. They're almost certainly lying. Yeah, they can leak. They're just the likelihood that it's actually leaked is very, very, very low. Nvidia at $900 basically right now. It bounced all the way back. It was under 800s for a little bit. They could leak. There's still rumors. JP Morgan got the CPI before the release. So, yeah, I mean, JP Morgan probably did, you know. But again, I mean, that's not a shock either. JP Morgan's not about to leak it to the consumers out there in the world, to the public. You know, I'm sure big money and big hedge funds do get a lot of data early, and that's probably, again, that's certainly plausible. Can't really say it's shocking, though, if they do. Yeah, so Supermicro Semiconductor is expecting 579 EPS on revenue of 4.01 billion. AMD's expecting 61-cent profit per share on revenue of 5.42 billion. Amazon expecting 81 cents per share on revenue of 142.55 billion. They're all dropping. So AMD's dropping at 415, Supermicro dropping at 405, and Amazon at 4. Oh, yeah, I mean, obviously, knowing early is certainly a huge edge. They could give me the data early, you know. Do you think Tesla rallies more because of China FSD? I'm not sure what it really is. I know it's giving it back some today. But still doing really strong, you know. Yeah, I see Cannabis Growth, CGC, ripping up to like $14. ACB, I'm sure, is up. There's a bunch of cannabis stocks that are doing great. And again, this is good for the cannabis companies overall, specifically because what this descheduling is going to do is it's going to allow lending to be done on cannabis products, and that is going to grow the industry for sure. So this is good for them. Yeah, and of course, like people in the DEA, like Jack Riley, saying it remains a gateway drug. Like, dude, it's a gateway drug because you keep it illegal, you know? Like, again, people are told different things by the government, but, like, it's a gateway drug. Again, nobody can argue against the what I said, which is that it's a gateway drug because illegal drug dealers sell it, you know? And that if nobody's going to try to sell you other stuff at a dispensary, you know? The reason it's a gateway drug is because it's illegal. Legalizing it would solve that, but again, the DEA, they're really concerned with losing the income that they get from arresting people for cannabis. Like, that's obviously it, you know. The DEA saying they're worried about cannabis being legal. It's kind of like a doctor being worried if you give away medical advice for free online or something, you know what I mean? Like, it's, of course they're worried about it because it takes away a massive chunk of their business. Anyways, super micro semiconductors back up to 870s. It's an interesting, dude. It's a big move, big event. It's still not, you know, it's really not going to do anything legal, like legally for cannabis users or anything like that, but it's interesting. They said, quote, "It is time for the DEA to act," the lawmakers wrote. "Right now, the administration has the opportunity to resolve more than 50 years of failed discriminatory cannabis policy." All right, so again, super micro backup. Would y'all rather me put up super micro or AMD on my left chart? Yeah, drinking coffee doesn't make people want to go try harder, you know. Like, all right, chat, we still got about 15 minutes. Again, AMD is scheduled for 4:15, so they're 15 minutes after the bell. Super Micro is at 4:05, and Amazon's supposed to drop right at 4 p.m. Yeah, but I mean, essentially the same thing would happen at a Walmart Wonderland. I don't think that's an argument against it either. You know, somebody could do that to you at freaking Chipotle, brother. You know, who has Amazon calls? A lot of liquidity has accumulated above market makers will want to buy above. Leave coffee alone. Stevia Cola is really what I got. I got Stevia Cola over here. All right, chat. We got 15 minutes. 15 minutes. Right here, you can watch earnings. Yeah, we'll put a timer on. My bad, guys. Here. It's a big tech earnings day. It really is. All right, here's the timer. I'll put all three charts up is probably what I would do. It's not like I have to pick and choose. Amazon in the middle, AMD on the left. Yeah, that doesn't sound like a fun life, man. I had some friends that fell off into that stuff, Wonderland. You know, last I heard, one of them was living in a tent on the beach in Pensacola, homeless, you know. So it makes you crazy. That stuff makes you crazy, man. Did Bitcoin get all the way down to the 50s? Yeah, it hit 60,000. Really big weakness now. I don't know. He might, Hank. I don't know. Probably not. Yeah, I mean, he was never really the smartest kid, though, to be honest. Like, he just made a bunch of dumb decisions and, like, you know. Yeah, I think everybody has those friends in life where you meet them or where you know them. They're close friends. And then, like, you get older and, like, kind of move on with your life and start, like, you know, you got to, like, I got a family, I got wife, I got kids, I have work and jobs and, like, ambitions and passions and all these different things. And, like, some of them are just acting exactly like they were acting 20 years ago. Like, they never grew up. Like, they're still acting like, trying to be the bad boy. It's like, dude, after freaking 30, nobody thinks the bad boy is cool anymore. Like, the only people that think the bad boy is cool is freaking, yeah, it's just dumb. But they just don't get it. They don't understand, you know. Are you bullish, guys? On Amzn. Amazon's been pulling back a little bit. It's still strong, though, I think. But Amzn at 180s. Amzn rebounded a lot the last few days on the tech bounce. You know, Amazon's really only down about 5% from highs. So, it's down about $10 from highs of the day, about 5% from highs. From lifetime highs, too. So, Amzn, 5% down from lifetime highs. If it has good earnings, it could break lifetime highs. It's possible. Bullish on chips. Amzn, not so sure, but if they do add dividends, then 10% plus to the upside. If they do break 10% on the upside, they're going to be breaking lifetime highs. All right, chat. Look at the Amazon stock go all the way down to 178, testing lows of the day now. All right, so let's see if we bounce. But Amazon just broke lows of the day leading into their earnings report in less than 8 minutes. All right, so still cracking down here. I don't know if there's a reason for this or what, but I guess tech in general dipping down is causing these moves. Tesla You know, Tesla's still pretty weak. Meta, but yeah, Meta dipped pretty heavily here. Is it Nvidia? Yeah, I mean, Nvidia's turning down too. 8 minutes, chat. Yeah, Jerome Powell tomorrow is crazy. Should be a crazy run. Or should be a crazy stream, I mean, not a crazy run. I don't know if we're going to run or not, but it should be a fun one. Alright, chat, 7 minutes. Yeah, I mean, it could be people are worried about the FOMC meeting tomorrow. The FOMC meeting's not until 2 o'clock, though, so we still got a lot of time, in all honesty. I'm also going to throw this in sub-only mode, chat. So if you haven't already, hit the subscribe button. I'm pretty sure this one thing will help us break... we need 45 subscribers to break 135,000. So we're moving up to 140K. Hey, later, Sam. Yeah, so PayPal, where did PayPal go? Did PayPal do anything from its earnings report? I mean, I know it corrected back down a little bit. Yeah, so it's up a little bit from its earnings, but not much. All right, guys, 5 minutes. 5 minutes. You guys ready? All right. So look at Amazon still dumping down here, chat. Wow. Down to 176. Yeah, tech is tanking right now. Probably ahead of the FOMC meeting. You know, let's see if we get anything good. Let's see if it bounces back. Is it time to buy it up ahead of earnings? I don't know. I think the extension is... I don't think it's downward extended that much, but this might help it. Maybe it has good results. I don't know. Yeah, I really don't know. All right, chat. We got 3.5 minutes left. Bouncing back up to 177s here. Yeah, I don't think we're going to raise rates tomorrow either. Yeah, I don't see any other big catalysts going on. I'm looking. You guys ready? All right, so Amazon back up to 177s. All right, chat. Almost here. Here we go. 2.5 minutes. I don't know. Amazon is about 5% away, a little bit over that now. Really, it's a little bit more. It's probably about 7% away from lifetime high. So if it has really good results, it certainly could break. We'll see. It could. I don't know if it will, but it certainly could if it has good results. Yeah, Bitcoin dumping down here, chat. All right, 2 minutes here, chat. 2 minutes. You guys ready? The market didn't crash. The market's not down. The market dropping a couple percent isn't a crash. 30% is a crash, not 2. People sensationalize so much, you know? Like, you're telling me, like, look. Here's a yearly chart on the SPY. You're telling me this is a crash. What are y'all talking about? Stop it, you know? we got a minute and a half left. A little bit less than that. All right, chat, here we go. It is time. It's time. We got about a minute left, about 1 minute. All right, guys, here we go. 40 seconds. All right, guys, here we go. 20 seconds. 20 seconds. Hit the subscribe button real quick, guys. We need 29 subs to break 135,000. Amazon is dumping down here, chat. Dumping down. Still waiting on the report. Here we go. Supermicro, AMD, and Amazon dropping numbers right now. Amazon scheduled to drop right at the closing bell. And there's the closing bell, chat. Let's see what we get. All right, so there's the closing bell. Volatility showing up. Amazon at 176. 174. 175. Volatility showing up here. Big downward pressure ahead of Amazon's numbers. And we'll see if it can help the market rebound here. Again, here's AMD down here at 159. Supermicro hasn't moved much. Still waiting on these numbers to drop. So pause. Bear with us here, chat. We'll see when they come out for sure. We'll see when they come out. So far, nothing yet. AMD scheduled for 415. Amazon scheduled for 4. Supermicro scheduled for 579s. You guys ready? Amazon down to 173s. It is moving down a little bit. Nothing's out yet for their earnings, though, but patience. All right, look at AMD. AMD is supposed to drop theirs later, though, than all of them. 415. None of this really matters. They could drop whenever, to be honest. But AMD is pushing up a little bit, which is interesting. All right, there goes Amazon. Amazon up to 180s, chat. Amazon up to 180s. 183s. Retracing back down to 174s. 180s. All right, so Amazon is out. They posted net sales increasing 13% to 143.3 billion. Breaking lows here as traders digest this earnings report. All right, so again, we're breaking down Amazon right now. I'm looking up everything. So again, Amazon net sales are up to 143.3 billion compared to 127.4 in the first quarter. Excludes 0.2 billion unfavorable impact. Operating income is up to 15.3 billion in the first quarter compared with 4.8 billion in quarter 1 of 23. Net income increased 10.4 billion in the first quarter, or 98 cents per diluted share, compared with 3.2 billion. So again, 98 GAAP EPS. Amazon did much better than expected here. They posted 98 versus 82. Sales beat expectations as well. There's Amazon right there. So again, good numbers here, chat, at 182s right now. Almost green on the day. So Amazon with pretty good numbers here, pretty good numbers. Still waiting on AMD and Supermicro Semiconductors, but again, Amazon is up. Good results here, chat, for the most part. Again, y'all hit that sub button if you haven't already. We need 25 subscribers left to break 135K. Do it now. You know you want to. Amazon up to 185s. Chat, 185s right now. AMD up to 160s. We still got AMD dropping at 4:15, and we got Supermicro Semiconductors dropping in 3 minutes. It's 2 minutes. Stick around. Yeah, we're going to look at their guidance numbers and all this stuff, but so far that's what Amazon showed. Amazon said, quote, hold on, let me find it. We do have a quote from Amazon. Amazon said, quote, "It was a good start of the year across the business, and you can see that in both our customer experience improvements and financial results," said Andy Jassy, Amazon president and CEO. He said, quote, "The combination of companies renewing their infrastructure modernization efforts and the appeal of AWS's AI capabilities is reaccelerating Amazon Web Services growth rate now at 100 billion annual revenue run rate." I'm going to pause this for a second. Amazon guidance came out. Second quarter sales guidance came in at 149 billion. Second quarter net sales guidance came in at 149 billion versus 150 billion. So lower than expected guidance for Amazon, to be honest, on second quarter net sales. Again, second quarter net sales guidance did come in lower than expected. They expected 150.07 bill. They ended up showing 149. Supermicro just spiked up to $900. And so I'm not sure if their earnings are out yet, but again, here's Amazon's numbers and guidance that you can see here. Again, Amazon at 185s right now, 185. Supermicro's at 884s. We got Amazon at 185s. AMD at 160. All right, Amazon Web Services sales segment increased 17% year over year. And I'm going to keep reading this quote from Amazon here so you guys can check it out. So again, Amazon said, quote, AWS sales increased 17%. So the combination of companies renewing their, and this is all quoting Amazon CEO, said combination of companies reviewing their infrastructure modernization and efforts and the appeal of AWS's AI capabilities is reaccelerating Amazon Web Services growth rate. Our stores business continues to expand selection, provide everyday low prices, and accelerate delivery speed, setting another record on speed for Prime customers in quarter one, while lowering our cost to serve, and our advertising efforts continue to benefit from the growth of our stores and Prime Video businesses. It's very early days in all of our businesses, and we remain excited by how much we can make customers' lives better and easier moving forward. End quote. So Amazon says Amazon Web Services growth rate is now at 100 billion annual revenue run rate. So we're going to put this up in chat as well. We're going to post a lot of this stuff, show it up in chat. Yeah, Supermicro looks like it's out, but I'm waiting to see the numbers show up. They could be, let me see. All right, so Supermicro is out. They posted net sales of 3.85 billion versus 3.6 billion in the second quarter expected. Gross margin of 15.5 versus 15.4 in the second quarter. Net income of 402 million. Supermicro posted adjusted EPS of $6.65. Expected 578 in revenue, coming in lower than expected. So Supermicro Semiconductors actually had lower than expected revenue here. Chat. Here's Supermicro's numbers right here on the right. Here's Supermicro's lower than expected revenue, better than expected EPS. Revenue is generally a little bit more important than EPS, but still. Mostly green so far. Supermicro just broke highs. Is at 930s right now, Chad. 930s for Supermicros. Nvidia just broke 880s. So I guess this AI news is helping all of them. AMD scheduled to drop in about 9 minutes here at 4:15 p.m. 4:15 p.m. But Supermicro is starting to run. It's got the lowest float out of all these three, and it's running. I am reading this on TOS News is what I'm looking at right now. Pinterest is Pinterest. Nobody cares about Pinterest, bro. Nah, I'm just joking. Quarter one revenue for Pinterest up 23%. GAAP net loss 25 million quarter one. Total costs and expenditures were about 800 million. Global monthly active users is up 12% over up to 518 million MAUs. So again, a little choppy here. Super Micro with mixed results, good guidance or good EPS but bad revenue. Amazon had good EPS, good revenue, slight miss on guidance, but it was about neutral. AMD has not come out yet. They drop at 4:15. Chat 4:15. So stick around here, guys. We're gonna cover all this stuff. Amazon earnings are right below me in big bold letters. Again, if you haven't already, chat, check out Apex. Apex is one of my sponsors, and we are up thousands today day trading futures. And most day traders lose money. All right, just to put this into perspective, most day traders lose money. It doesn't matter whether you trade futures or stocks or whatever. Most day traders are going to lose. And so instead of risking thousands of dollars, guys, instead try a funded account program. It limits your risk. If you lose, it's not the end of the world. But if you're good enough to pass the funded account program, you get a 90% split on Apex. And so they give you a demo. They test your skill with a demo account first. The base one's $25K demo account. You got to make $1,500 in profit without losing $1,500. If you can do that, they fund you $25K with a 90% split. So limited risk. If you lose, it costs $30 for the challenge. If you use my link, $30. It's not the end of the world, right? If you lose. But if you're good enough to pass it, you get $25K in funding with a 90% split. We got funded on a $50K challenge not too long ago. And today we are up. Let me show you guys this stats. This is my stats today. I'm pretty excited about it. You can check it out right here. Super Micro started to turn on us. All right, so here's my trades today. Guys, you can see I netted $1,100. We're up $1,200 gross roughly. About a 60% accuracy rate. I'll take it. I'll take it. We took some swings. We had some fun. And yeah, not a bad day. And again, if you want to check out Apex, they are a sponsor of mine. I'm super biased because they pay me money. They pay me money. I'm biased because they pay me money. Anybody's going to be biased. If they pay you money, you would be biased too. All right. But if you want to check them out, use promo code BT, beginner trading, BT. Remember, I am terrible, have no idea what I'm talking about, and I'm wildly wrong about anything and everything I say. If you want to check it out, there's the link. Promo code BT will get you the max discount at all times. Again, they're a sponsor of mine. I'm biased. Anyways, Super Micro came all the way back down. It's honestly really flat. I don't know if the whole market is waiting for AMD earnings to come out or what, but AMD is scheduled to drop in about 6 minutes or so. A little bit, really about 5 minutes exactly. Definitely biased. So yeah, Amazon. They say AWS growth rate now at 100 billion annual revenue run rate. You can see that right here. So again, 100 billion annual revenue run rate. Pretty solid. Pretty solid. Yeah. All right, Super Micro dumping here. All the way back down. We did have a bunch of other earnings coming out today. We'll put them all in chat. Starbucks came in at 68-cent loss per share, or 68-cent profit per share. They expected 79-cent. So worse than expected for Starbucks. EPS revenue came in worse than expected as well. Comp sales down 4%. Expected a gain of 1.46%. I'm sure Starbucks is down heavy right now. Sometimes earnings are nonsensical, though. Yeah, Starbucks is down a lot. It's down from almost 90 down to about 80 right now. Starbucks down, 12, 13%, whatever that percentage is. Amazon's starting to go back up. Super Micro Semiconductors and AMD are the ones retracing right now. We still got to wait for AMD. AMD's mostly sideways. Super Micro Semiconductors is the one that's looking kind of weak. It's down to 815. It's got the lowest float out of all three of these, meaning it can move in a bigger range because of the smaller float, right? The less shares that are out there, the more impactful each individual trade is towards it, right? So companies with small floats like Super Micro Semiconductors relative to blue chip stocks like Amazon are going to have a bigger range, move in a more volatile way, probably have a higher move percentage per day, stuff like that. Anyone here watching earnings? No, we're not watching any earnings today, What's the earnings, bro? I don't even know what earnings are. What time Amazon reports? I don't know, man. They might be in big letters right below me. They could be. I'm not saying they are, but they might be in big, bold letters specifying exactly what the results were for Amazon. I'm not saying they're out already, but they could be below me, right? In this area here. Good, sir. All right, chat. Hey, Starbucks is dumping down. It's at $81 a share. $81 a share. Super Micro is still pretty flat. We're still waiting on AMD. AMD is scheduled to drop in about 2.5 minutes, give or take. This is a world-class ping pong tournament. I hear they rather you call it table tennis, personally. You know, I'm the greatest ping pong player of all time, you know. My name rings in the ping pong streets of the world, you know. All right, guys. Hey, Starbucks is down a lot. Super Micro trying to bounce back a little bit. It's at 840s. Amazon at 180s. Yeah, I'm like Forrest Gump, basically, you know. Top 3 in the world, ever. Hey, John, how do you get Carvana earnings tomorrow early, fast? You look them up? I don't know. I mean, honestly, earnings are reported by every major stock platform and news outlet. But, I mean, you can watch them here. You can watch them early here. We're going to cover them, you know. Again, Pinterest is out. Is it really Anders? Is it really 2 different things? I really had no idea. If so, I retract my previous statement, you know. Amazon consolidating. AMD is about to drop in about 30 seconds. 30 seconds, AMD. Technically, it's scheduled to drop. We don't know if it's going to, but AMD is technically scheduled to release at 4:15 market time. So watch AMD, the right chart. AMD's big earnings related. It's kind of like Nvidia. It's a smaller company, does the same thing as Nvidia. Smaller, but it's still pretty influential over the microchip space, which is influencing everything else in markets right now. So again, watch AMD on the right side. It's at 158. Be ready. Let's see. And 10 seconds until that bell, or until the time it's supposed to release. How do you see them when earnings come out? Again, they might be in big letters right below me. All right, chat. AMD on the right. Nothing's happening for them yet. Okay, there we go. So AMD is out. It's dropping pretty big from this report down to 153s. This will drag everything else in tech down most likely if it's big. 151s back up to 155s. AMD is out. So they posted revenue of $5.5 billion versus $5.42 billion expected. So higher than expected revenue for AMD. They posted EPS of, that can't be right, 7 cents? Diluted earnings per share of 7 cents. That can't be right. Let me see. Hold on. Is it 62 cent EPS? Yeah, so they posted 62 cent EPS versus 61 cents expected. So mostly flat. They did better than expected for revenue, worse than expected for EPS. So yeah, that is them right now. We're going to go ahead and look at all of it, but yeah, that's basically it. They said, quote, we delivered. Here, I'll put this up on screen first. Here's AMD right now. It's in the comment section. Here's AMD real quick. Again, they said, quote, we delivered strong first quarter results with our data center and client segments, each growing more than 80% year over year, driven by the ramp of the MI300 AI accelerator shipments and the adoption of our Ryzen and EPYC processors, end quote, said AMD chair and CEO Dr. Lisa Su. Quote, this is an incredibly exciting time for the industry as widespread deployment of AI is driving demand for significantly more compute across a broad range of markets. We are executing very well as we ramp our data center business and enable AI capabilities across our product portfolio, end quote. They said, quote, AMD started the year strong, delivering record quarterly data center segment revenue In addition, we drove solid gross margin expansion. Moving forward, we are well positioned to continue driving revenue growth and margin improvements while investing in the large AI opportunities ahead. End quote. For AMD, again, guidance numbers for AMD came in at $6 billion versus $5.7 billion expected. So purely on guidance alone, I would assume AMD rebounds a little bit just based off of guidance here. Again, this is guidance. Or here's AMD's numbers. Look, here's guidance right here. Let me put them up in comment. So here's AMD's guidance. This alone might make me buy AMD right now. Yeah, I'm going to buy AMD here, to be honest. I don't know how many to buy. All right. All right, we bought some AMD. Again, good guidance numbers. Better, way decently better than expected guidance, in my opinion. Now we'll see what happens, but we did buy some AMD. As we always do, we're gonna take it. We just took, a third of the position off. We'll let the rest ride, I think. Actually, we'll. All right, now we'll let the rest ride. We've already taken profits. We made a good bit pretty quickly here, and we can just kind of sit on the profit, let the rest work. I think we're gonna bounce back more than this. Again, AMD had better guidance than expected here, and that's good. So they came in at $6 billion versus $5.7 billion. AMD data center revenue is up 80% year over year. Client segments is up 85%. Gaming is down 48%, and embedded is down 46%. So Amazon's starting to turn down to 176s here, chat. For Amazon, again, down to 176s. Can someone please explain to me how AMD and Supermicro beat expectations but are dropping? I mean, Amazon did the same thing because companies are not going to go straight up or down. It's not a binary reaction. It's not like, how easy would it be to make money if you could just sit around waiting for a company to report good results and buy it? Again, I'd sit around all day just waiting for a company to report earnings. If it had good earnings, I would buy it and make money and be a billionaire. That's just not that easy. Markets are open constantly. The real moves from these earnings reports are happening in the prior quarter. So, yeah, I hope that makes sense. All right, we're going to take a little bit more off since we're up, pretty decently. All right, so we're going to hold on the rest and just sit on the rest. Amazon back up to 180s here, chat. Yeah, it's also the day before the FOMC meeting, and so in that regard, it's a big, volatile, busy freaking day tomorrow that we might have a lot of craziness go on. And so in that, again, this is not that easy to predict, I guess is the easiest way to put it. I wish it was, it's just not. All right, guys, AMD back up a lot. You'd love to see it. I mean, I wish I was green in equities on the day, but freaking everything's down big. And so, hey, that's how it goes sometimes, I guess. Nice little trade, though, man. Honestly, I bet you if I just sat around taking these trades, my account would be loving life. I might want to start sizing up for some of these trades. The accuracy that I have with these type of positions. Again, one of my favorite strategies is waiting for a company, watching their earnings report, waiting for them to drop what I consider good results and then dropping huge percentages. This happens pretty regularly with earnings. It's not just this quarter. It's not just this year. This happens all the time. You see it all the time. Again, AMD, good guidance. Like 300 million better than expected guidance. And so, yeah, when AMD drops down to freaking 140s, buy it up. Now it's at 155. We just made a very, very quick, 3.5% on AMD with just kind of sitting around doing this. We do this every single earning. You can ask Pawn. Pawn watches me do this. Again, I'm going to have to start scaling up my size. We've already scaled out a lot of it, but still. Yeah, so there's Amazon's numbers right there. Yeah, we'll put all these numbers up, chat, here. Give me a second. I got you guys. All right, so again, here's Amazon. We're gonna put AMD. We'll put Super Micro, or I guess we can't. All right, so we're gonna put Super Micro up. All right, so yeah, Super Micro Semiconductor Q3 came in at revenue of 3.85 billion. All right, so here's all of them basically. This is all of them right here below you. Did I miss AMD earnings? Yes, AMD earnings are right below me as well. They posted 62 cent, beat 61 cents. Mostly flat. Sales of 5.473 billion, beat the 5.459 billion expected. Super Micro came in better. Almost everything came in better than expected, to be honest. Amazon is mostly flat. Super Micro is down, and AMD is down, even though AMD had good guidance and beat both metrics. So, you know. All right, so Super Micro Semiconductor earnings. When's their earnings calls? All right, so most of these are at 5 o'clock, I think. Yeah. Did I break 135K? I did. Hey, my guys, thanks so much. I appreciate it. All right, look at Amazon start to rip back up. Will the earnings call affect prices as much as the report? No. Yes and no. It's not going to affect. The report is mostly what influences prices. The call might, though. It depends on if they announce anything major. I mean, if they announce anything big on all of them, like that certainly could influence prices and all that stuff, but... All right. Let's see what else we got. Yeah, join the Discord chat. Join the Discord. Also, give your boy a follow on Twitter on at Beginner Trades on Twitter. So aged Wagyu beef is a real thing. What does it mean by aged? Looks good. Kind of looks like brisket almost. All right, so AMD starting to bounce back still. I don't know whether to sell it. What I want to do, I'll probably just sit on it, I guess. Again, what the cannabis classification is changing back. Yeah, I've had Wagyu before. Like when my wife and I's anniversary, I kind of splurged and here's a Discord link if you want one. Here, join our Discord. I kind of splurged and got some Wagyu. I think it was like $400 or whatever for the steak. I ended up giving Rosie a piece of it too, and I brought some home and I gave it to my kids. And so. But I've had it a few times, but I can't remember what it was, like Kobe. Maybe it was Kobe. It wasn't Wagyu. I don't know if it was Wagyu. I don't know. I don't know anything about it, but. Any experts can teach me how to avoid taxes. I made $100K from options so far this year, but worry that half of that will go to IRS. I mean, I'm not the guy to teach you, bro. I overpaid my taxes, dude. Ask a CPA, bro. I have no idea. I'm not even gonna try to answer that. People estimate super micro to move plus or minus 10%, but it just stayed flat. Yeah, I mean that's kind of how it goes sometimes. Nobody knows how much it's gonna move. Again, there's a very very good rule of thumb, and the rule of thumb goes. People who act like they know the most about what's going to happen generally know the least. So if anybody acts like they know for sure what's going to happen, they probably don't, that's the part to understand. And so, especially in stocks. So if you see somebody that acts like they know exactly what's going to happen with an individual company, with an individual stock, whatever it is, especially short term. Like an example is I get people all the time telling me in chat, like, here, this stock is going to crash tomorrow, just watch. This stock is going to crash tomorrow, just watch, or whatever. And they get really disrespectful and annoying and kind of like, and then they're always wrong. Like that's the craziest part, is that they're almost always wrong. And so the rule of thumb is that genuine experienced traders don't know what's going to happen and will happily admit they don't know what's going to happen, right? Less experienced traders don't really understand how it goes, and so they think that it's predictable, and it's not, The Astros is still getting destroyed. I mean, it's still early, but man, we are 9-19, dude. The Astros suck, bro. Poor Angels, bro. Poor Mike Trout, dude. Poor Mike Trout. Will Trout ever win a World Series? I don't think so, man. Not unless he's like 40 and they keep him on. The Angels should be ashamed of themselves, man. Shohei Ohtani did what he needed to do and got the F out of there, bro. Trout should have taken a different contract, bro. Trout should have left a long time ago. All right, guys. So again, I think Nvidia's still falling back down. Who's your favorite baseball team, bro? I mean, honestly, the Astros. I live in Houston, and so. But again, if not the Astros, the Rangers. Outside of like my home teams, I'm probably gonna go with like the Braves or like. I like the Blue Jays. I like Vladdy. you know, and Bo Bichette and all them over there, and Springer. I don't really have a favorite. I like watching all of them. I got players I like, but yeah, I've got you, Abdul. Yeah, if you want to check out Apex, again, if you want to day trade with me, I can't guarantee you're going to make money. I can't guarantee any of this stuff. You want to confirm it all with them. Remember, I'm not an investment professional. I'm not liable if you lose. I do trade off stream. I don't guarantee anything. I'm not an investment professional. Don't copy me. Understand CFTC 4.41 and hypothetical or simulated performance varies and have limitations and all that good stuff. Basically, don't sue me. I'm not an investment professional. Here's the link. Check it out. Favorite hockey team? I don't watch hockey, bro. I mean, I used to watch, like, I played ice hockey when I was young. You know, so I actually played hockey. I was terrible at it. I wasn't good, but I can ice skate fairly well. But with that, I don't really watch hockey. Hockey's too boring. No offense. Hey, nice, Haram. Amazon's earnings call is in about an hour. Well, we're going to stream it. We're going to sit here and hang out. No way, bro. You live in Houston. Would like to meet you sometimes. I mean, no offense to you, brother. I appreciate all of you guys. I really do. But, like, some of the people on the live stream have just been so weird. It's kind of turned me off to, like, the thought of meeting people in real life. I've met some people in real life, and they were cool, and they were chill, and they were nice. But I met some other people that just got weird, and, like, I don't know, man. Honestly, anytime I've ever told anybody about this YouTube channel, you know, outside of you guys, weirdness happens. You know? Supermicro Semiconductors it's mostly moving flat. I mean, it did better than expected. EPS missed revenue. So SMCI BDPS missed revenue, so it had mixed results. No, it's nothing against whomever this was, AJ. It's all good, bro. I know it's not you. It's probably not you, at least. But I'm just not really trying to meet up with anybody here, man. Again, you know. Again, I'm not even trying to act like I'm some huge YouTuber or anything like that or anything. But like, yeah. Some people are, you know, puts the lotion on the skin type of people, you know what I mean? And I'm not trying to get involved with that. Oh yeah, I said hockey was boring. I said it, bro. And I'm a baseball guy too. I knew this argument was coming. And I'm going to give you, listen. Baseball is a game you throw up as a background noise. You know, like you don't really watch baseball. You put it in the corner on the iPad and you look at it every now and then when the good batters are up or when a pitcher's really hot or whatever it is, right? I call it dopamine detox of sports, okay? Hockey, it's too fast-paced for that. You know what I mean? Like, I guess you could do the same thing. Again, I'm just not a big hockey fan. I don't know the players. I was never really any good at it. And, like, I was okay at baseball. I was never really good at hockey. I'm just not a hockey guy, you know. I can respect hockey. I love the movie, what's the one with, about the enforcers? I love the movie Goon. Great movie. My stepdad's Canadian. By all things, I should love watching hockey. But I don't. I'm sorry. I like watching the fights. The fights are fun. My favorite sports to watch are mostly like MMA is probably the top. Like I'll watch if it's a good UFC card, I'm watching it. You know, I train jiu-jitsu and like, you know, and stuff. So that's my bias with there. But I watch baseball. I watch football a lot. Go Tigers. I'm an LSU fan. I'm from Louisiana originally. So, you know, go Tigers. But, yeah, I'm just not about to watch hockey. I'm sorry, I said it. Mighty Ducks, great old school movie. Where would you rank golf at? I don't know. I don't even know how to score golf, brother. I don't even know how to score golf. I know if I go to a driving range, I can whack the hell out of the ball. It's not accurate at all. I don't know where it's going, but I can Happy Gilmore that ball, mostly from playing baseball. But, I'm pretty sure my form isn't right. I'm pretty sure I'm not supposed to bend my arms when I do it. I don't know. I'm doing something wrong. But I don't even, again, golf isn't really my sport either. Although I did watch the documentary and I got an itch to learn. Yeah, we're waiting on the Amzn conference. We're going to stream the whole thing live when it happens. Yeah, all good, AJ. It's all good, dude. All right. All right, so the Amzn conference is going to be streamed here live. The market is influential when every parameter is winning, all indicators are correct, why it goes down. I don't know how many times I got to explain this, chat. Okay, I'm going to have to start thinking of more creative ways to explain this. All right. So, by your logic, Jay, if a stock reports good earnings, it should consequently go up from those good earnings. That's your argument, is that if a stock reports good earnings, it should react positively to those good earnings. And I understand the argument, right? I get it. I understand it. I'm not even saying I disagree with it. But what's to stop somebody from just sitting around, and just waiting for companies to report good earnings and then buying them and riding the wave and then sitting there just doing that over and over and over again, every earnings call? I would be a billionaire if that worked, right? Unfortunately, it doesn't work because the real buys and sells are happening in anticipation of those earnings. And generally, the market is only kind of like reacting to the earnings call in that way. So, like, if people are bullish on AMD, they're going to be buying up AMD during the previous quarter, prior to the earnings report. Now, if they're bullish, they're going to buy it. If they're bearish, they're going to short it or sell it or whatever. But those type of buys and sells are happening prior to the actual earnings coming out. And so once the earnings are actually out, you get profit taking a lot of the time. So, like, basically what happens is companies report the numbers and then you get people taking profit and, like, doing all these different things. Like, that's what's going on, basically. But it's just not that easy. It's just not. AMD bouncing back up, though. Looks good. Yeah, we're going to stream Apple earnings the day after tomorrow. Tomorrow, we also have the FOMC meeting. We're going to stream that, too. We cover all the major economic reports and events here. So stick around. We'll cover all the big ones. If you want a good one-stop shop to catch all these economic reports, earnings, subscribe. Like, we do this live every day. Subscribe. Hit the notification bell. We appreciate it, So I went to the jewelry store yesterday, and I'm like a watch guy, right? I got my watch on right now, And so I bought this watch from them not that long ago. And I went in there, and they had an Omega, right? If you don't know watches, like, Rolex is like the most well-known luxury watch, right? You got Omegas, which I would say, unless we're talking about like APs or Pateks or whatever, Rolex, Omega is kind of like, goes Rolex, Omega, a couple other brands probably, But again, after Rolex and Omega, over those better watches than those are like Pateks or Patek Philippe. I don't even know if I'm saying it right. Because I can't afford those watches. Those are like freaking 40, 50, 60, $70,000 watches. I'm just not about to buy one of those. Anyways, so I go to freaking the jewelry store, and they have an Omega there, right? And so I'm looking at the Omega, and at first she's like, "Hey, this watch is like $2,400." And at first I'm like, "Okay, great, let me buy it. Like if that watch is $2,400, I'll take it. Like I'll buy it, you know." And as I'm getting out my card and everything, she looks at the tag and she says, "Oh, never mind. This Omega's $5,600." And so then I'm like, okay, well then never mind. I'm not about to pay, $5,600 for that. It's an Omega, It's cool, but like, I'm gonna pay $2,000 to $4,000 for one, unless it's like a really, really nice one, which this was probably like a generic one or whatever. And so she's really heavily pressuring me to buy this watch. She's like, buy this watch, you better do it now. If you buy it now, we'll take $400 off. It'll still be $4,800 or whatever. And I'm like, all right. Well, like, give me a day. I was like, I'm gonna go research this a little bit. And she did not want me to research it. I get home, I look up the Omega watch. And from what I could gather, this Omega watch is only like a freaking $3,000 watch. Like, I don't know why in the world they're trying to charge me $5,000 for this thing. It's not a $5,000 watch, unless maybe I got the freaking number wrong. But there's no way in the world I would ever buy that watch for that. I don't know watches that well. Do Omegas appreciate like Rolexes do? Like a Rolex will keep up with inflation. A Rolexes have kept up with inflation to a certain extent. Not fully, of course. They're not perfect. But like to a certain extent, they've kept up with inflation. But yeah, I don't know. It had a black face on it. It was Omega. It just looked pretty plain to me. I mean, I still can't find a justifiable price. I don't know if maybe jewelry stores are like that, where they just don't want you to look up the price and they just hope that you just kind of splurge or whatever. But, I remember it had a red like thing underneath it. All right, AMD up to 154s. Amazon back up almost green on the day. I think this is it right here. Yeah, this is it right here. I mean, I guess this isn't that bad. I found it. This is it right here. But like, aren't all salespeople? I mean, I get it. I'm not even mad at them for it. I'm just trying to say, I think it's gonna be a hard time to sell. Like, this is the watch right here. So yeah, they were trying to charge $5,500 for it. I mean, I get it. Again, I bought this one not too long ago. Which I think this one's called the. Never mind. I'm not gonna be too specific, but I got that one not too long ago. It's pretty cool. Yeah, well, this is a Seamaster. I just don't know enough about Omegas to really say. Super Micro breaking lows here, guys. Down to 790s here, chat. 790s for Super Micro Semiconductors. It's breaking down. Amazon's still holding its gains, and AMD is still up there as well. But Super Micro is falling. I'm not sure. The earnings call hasn't even started for Super Micro. I'm not sure why they're down this much all of a sudden, unless somebody with a huge size is all of a sudden just unloading shares. I'm not sure why, but look at it dump. I don't know anything about them, Plas. Yeah, it depends, Prince. I don't know. Like, if I'm gonna spend this much on a watch, like, I just don't know if I'm gonna buy an Omega with it, you know. I don't really like APs, dude. APs look like freaking, like, Happy Meal watches. They look like child watches, you know. Like my son, here's an example, right? I was at the jewelry store, and my son was with me because we were kind of having like a guys hangout day. So my son was looking at watches, and they've got the what's the like the big watch brand, the plastic, they're big plastic like colorful watches right now. I want to say they're like a Swatch or something. Let me see. No, it's not a Swatch. It's like the big plasticky colorful brands. Is it G something? G-Shock. Yeah, it's a G-Shock. So my son's looking at watches, bro, and my son just finds the most ridiculous, like, colorful looking watches, right? The most ridiculous, colorful looking watches. I don't know. There's something that made me not trust the salesperson, the sales lady. You know, when she was checking out my son's watch, right? My son's looking at all these crazy, freaking ridiculous watches. The heads on these watches are so big. I had to tell my son's 10. I'm like, hey, dude, listen. You buy that watch, you're going to look freaking ridiculous, and it's not going to fit on you, bro. Like, you gotta get a watch that fits. But anyway, so I give her the watch. My son ends up picking a more mild watch, and the price tag says like $99. And when she rings me up for $300. And so I'm sitting there like, you know, and I remember I looked at the price, and she just didn't say anything. She just rang me up for $300, almost scanned my card. And I said, hey, you know, this watch isn't $300. This watch is just $99. And she said, oh, no. And she showed me a different watch in the catalog. And she was like, see, it's $300. I was like, hey, that's not the watch that he got. He got this watch right here. And she's like, oh, you're right. Like, she tried to pull a fast one on me, you know. Again, I don't know if I trust this store now. It's kind of I don't know. Yeah, 2011 for sure. Yeah, see, everybody knew. My son does not have an AP, but APs look like child watches to me. Like, look. Or no, never mind. I'm not talking about APs. What's the other brand? Y'all know which one I'm talking about. What's the luxury brand that it might be APs? What's the ridiculous looking ones, man? Maybe it's not APs. APs are cool. I can't afford them, but they're cool. Yeah, I could never buy one, but you know, but they're cool. They're 50 grand minimum, mostly 45, 50 grand minimum. Yeah, I'm not buying one of those, dude. I'd be, you know, no, oh, you're talking about, yeah, a Richard Mille is what I mean. Richard Milles look like child watches. You know? Like, you're gonna tell me, okay, that this is freaking $2.5 million for this watch? Honestly, the fakes are getting so good nowadays, like, you know, they're reverse engineering watches. It's hard to tell. When I bought this one, I made them crack open the back. Yeah, cannabis stock surging because cannabis got reclassified here. So cannabis got reclassified to Schedule 2. It doesn't really do anything for the legalization status, so it doesn't. It doesn't really do anything big for, like, for legalization. They're still illegal. They're still scheduled as Class 2 now, which is not really any major difference. The only difference now is that The big difference, the big thing that's going to help cannabis companies, if you look at like CGC as an example here, the big difference is that companies are now going to be able to get lending for cannabis products. You know, that's why changing the classification is such a big news event right now for these stocks. Outside of that, in terms of everyday life, it's not going to affect legality much. So if most day traders lose money, what is the point of even trading? If most people don't finish law school, what's the point of going? If most people don't finish, you know, if most people don't ever become a doctor, what's the point of trying to become a doctor? You know, we could go on and on. I could go on and on. And just because most people fail at something doesn't mean all people fail at something. It doesn't mean it's not worth a try if you have the desire to. Tag watches aren't really ugly, I would say. Tag watches look like, you know, regular watches. I like tag watches. Yeah, I'm sure. Alright, guys, so again, AMD down at 151s here. We ended up taking most of the profit off. Probably just gonna sit on it, I mean. But yeah, here's AMD. It's trying to bounce. It rebounded, all, you know, a decent amount back up. We're already green on it. So, Movado is kind of like... So, Movados can be nice. But they're not like, okay, you know, you got like Casio or like, you know, Psycho or Seiko. I mean, you got Seiko, Casio, you know, Fossil, you know, all these kind of entry level watches, I guess, for lack of a better word, right? And then you have like real luxury watches like Rolex or like Omega or you know, Patek Philippe or whatever those are, right? Movado's somewhere in the middle. It's not like true luxury brand, but it's more expensive than like a Casio, right? So it's somewhere in the middle, I guess is the easiest way to put it. It's kind of like Belova or something like that, where it's kind of, it's not, it's hard to explain. It's kind of like in between them. I've got some Movados. They're cool. Yeah, BT is the code. BT, beginner trading, BT. All right. I mean, it depends on how much money you got, Vancouver. It really does. You know, like, if Jeff Bezos wants to buy one, I'm not going to judge him because he could do whatever he wants, and it's not really going to affect his regular day-to-day life in any significant way. Now, if somebody saves up $5 million and then spends half of it on a freaking Richard Mille, I mean, yeah, they're dumb, you know, but, like, you know, whatever makes people happy, I guess. Earnings happened to AMD. Tissot. Yeah, I mean, again, if I buy watches, it's not really that I even want to wear them. They're mostly kind of like investments. They appreciate well. Rolexes specifically, if you get the right Rolexes, they can appreciate. I'm not even going to tell you they will, but they're kind of investments is really why I buy them. Like, I'm not really, like, I'll wear them occasionally because, I mean, I spent the money on it. I might as well wear it. But it's not something in which I'm buying it purely to wear, you know. And the problem with most of the other brands, even if they're like real luxury brands, is that the appreciation is less likely. And so that's why I'm really hesitant to get an Omega, because Omegas don't appreciate as well. But some of them do. Seamasters, Speedmasters do. But everything else is kind of I just got to be for the right price if I get one. How do you ID a Rolex that's fake? You take open the only real way you can do it nowadays is you take open the back. You crack open the back of it. That's the only real way. The fakes have gotten so good, it's almost impossible to tell, to be honest. Like right now, it's almost impossible to tell. They reverse engineer Rolexes now, and you can buy what's called a super clone Rolex for like $1,000, right? You're spending $1,000 on a fake watch, you know it's good, but you could buy those for like $1,000 now. And because you got to understand, like most Rolexes are like, you're not going to get a good new like Rolex that's made in the last 10 or 15 years for under $10,000 really. Like it's 10,000 and up for Rolexes. And so if you can get one that is indistinguishable to most people for $1,000, it still might be worth it if you want one, but yeah. I mean, Rolexes, a lot of them though. The gold Rolexes actually don't appreciate that much. Like if you want to know which Rolex appreciate, it's not going to be the big gold ones. Usually like the rule of thumb is that if it has a nickname, it can appreciate. So that you got like the Hulk, you got like Starbucks, Batman, Batgirl, you got there's a bunch of different names. Pepsi, Sprite. There's a bunch of different names for Rolex for different watches, and if they have a nickname, they're a famous enough Rolex to where it'll probably appreciate, over long periods of time. Short term, anything could happen. What happened if we go back to economics here? Again, the Fed in 2020, the pandemic happened and everybody was home, and so people weren't working as much. The economy was at risk, right? So in 2020, we were at risk for recession and depression and stuff like that. And one of the ways the Fed combats those economic risks is by controlling interest rates. They can do so by straight up raising or lowering short-term interest rates, which is called the federal funds rate, which is tomorrow. The FOMC meeting is their decision on short-term interest rates, right? It's called the FOMC meeting, the Federal Open Market Committee, and they influence rates. And so they can either directly raise or cut rates. Lately they've been pausing rates, but they can also do what's called quantitative tightening if they want to keep interest rates high, and that basically means they unload their balance sheet, they let their current bond holdings mature and run off, and this keeps interest rates high, allows banks to keep interest rates high so that people stop spending as much, and when people stop spending as much, it helps inflation. The other side of that, like in 2020, Rolex prices doubled, because the Fed was sending stimulus checks home. Like we were getting stimulus checks, not the Fed, but the government was sending stimulus checks home. And so people had more money. And so Bernard Arnault, the owner of Louis Vuitton and Hennessy, they appreciated a ton, and prices for them went up a lot, and Rolex prices went up a lot. And the reason for that was because the Fed stepped in and did quantitative easing, which means that they're trying to keep interest rates low, because when you keep interest rates low, it allows consumers to spend more, because if you're spending less money on a mortgage or on an auto loan or whatever, you're going to have more money to spend on other stuff. And so, and we go over this a couple times every day or every week because it's good stuff to know, and tomorrow's the FOMC meeting, so it's probably even more relevant right now. But anyways, in that period of time, the Fed stepped in and they did QE, I mean. They cut the federal funds rate. They brought interest rates down to almost zero, short-term rates, and eventually it trickled into long-term rates. But by doing this, it allowed people to have more money to spend, and they spent more money, and thus it stimulates the economy. But yeah, going back to Rolexes, Rolex prices went up a lot in that period of time because people had more money to spend because interest rates were low, but also because the Fed had because stimulus checks and stuff like that allowed a lot of people burn their money, and some of them bought Rolexes. Rolex prices have since corrected back down a little bit, but it's been kind of up and down for sure. Hold on one second. Yeah, so it's interesting. So Rolex prices spiked and then they came back down, and now we're just kind of sitting tight. We do have the full Amazon earnings call coming up in less than 30 minutes.
Please, I'm not into video.
All right, guys, I'll be right back. My son's having a temper tantrum. I'll be right back. The earnings call starts in less than 30 minutes, chat. Less than 30 minutes. I'm going to put a timer up so you guys can be ready for it. It starts in less than 30 minutes. Oh, wait, here, let me fix this timer. So, yeah, it starts in 26 and a half minutes. Okay, here we go. So 25 minutes, 30 seconds. Again, we're gonna play the full earnings call for Amazon here as well, chat. The full earnings call. So be ready, chat. Be ready. I'll be right back. All right, we're back. Sorry, my son is throwing a temper tantrum. AMD bouncing right at 150s. We're still in it. I think I'm going to let the rest of this position slide, though. We ended up buying it, and we made some money. We took profit already. Our average price is the 140s. Somehow we got in right around there. Yeah, I like Citizens. My dad likes Citizens a lot. Hey, thanks for the subs, guys. I appreciate it. Yeah, my son got a cool watch, bro. I did, you know, he got a nice little watch for him. Yeah, we got 135K. We really got about 100 over that. Citizens are cool, man. I got a bunch of them. Like, I really do. Again, like, when you get into watches, AMD just fell even more. They must set up something during their earnings call to make it drop more. Let's see. Yeah, I mean, watches are good. Like, again, you start off with watches, right? Like, I got a Citizen, Fossil, like, all these different watches. And I bought Citizens for years. Eventually, I got the itch to buy a nicer one, too. But, Citizens are nice. I have a bunch of them, you know. I'm still green on my trade, too. We already took a lot of profit on it already, like I said, on AMD. Also, guys, check out my other sponsor. It's a company called Chart Prime. It's a trading view indicator service you can use in stocks, crypto, forex, futures. Really, really powerful too, because like it allows you to see different like indicators and signals in charts. And so let me show you guys this real quick. So again, here's Chart Prime. Again, trading view indicator service. I can use it in stocks, crypto, forex, futures, anything with a symbol on trading view, I can use it on. And so like, I'm gonna put this up. I haven't even looked at this yet, to be honest. But like, look at this. We got that strong sell signal. Like, look at how powerful this can be. So when you zoom in here and you back test it yourself, it can just be really, really useful. Not only can you see wedges, not only can you see like wedges and stuff like that, you can see this falling wedge. If you zoom in, this is a 5-minute chart and they don't repaint. Like, look at this strong signal that shows up. Look at the strong signal that showed up way before any of this breakdown. Like, look, it showed up right here. This is hours of red action after that. Strong buy signal showed up here. You got a nice little follow through. Look at this one as well. Way back here, this one showed up. Beautiful breakdown. Buy signal, you got a nice little bounce. Sell signal, you got a drop. I think all of these worked. I don't see any of these today that didn't work, but I can't guarantee you're going to make money with them. Nobody can. Look at that strong signal. Boom. Sell signal. Boom. And so again, it looks powerful. It looks powerful. I can't guarantee you're going to make money, guys. Again, nobody can. But again, any time frame, anything with a symbol on TradingView, check them out. They're a sponsor of mine. It's like 40 bucks a month. It can just be really, really useful to like see patterns. I love using them in the morning for my funded account programs like Apex. Like, I use these a lot for my funded account programs like Apex. We got funded on a $3,000 account on Apex the other day, and one of the reasons is because we were using them. And so they can be powerful as well. Again, if you don't know what Apex is, here's the link. Again, it's like 40 bucks a month, so it's pretty cheap. But again, like I always tell you guys, they're a sponsor. I'm biased. Remember, I'm terrible at this stuff and have no idea what I'm talking about. Might be wildly wrong about anything I say. Can't guarantee anything. You want to confirm all this stuff with them just to be safe. But yeah, check it out. Again, if you want to check out Apex, I'm pretty sure the sale ends today on Apex. I'm not 100% sure. Let me see. Or they might have kept the sale going. Did they keep it going for another day? So yeah, I think they kept it going for another month. Let me check. I haven't checked my email. So they're keeping the sale for Apex going another month, chat. I'll have to go back and look. But if you want to check out Apex, they give you a demo and they test your skill. If you can pass with the demo, they fund you between 25K up to 300K. The base one is 25K. The base one is 25K, so they give you a 25K demo account. If you can make $1,500 in profit on that without losing $1,500 first, they fund you 25K with a 90% split. Today on my accounts, we made like thousands. Let me see. So we made, let me look. So here's my, where is it? Trade Evade. Here it is. So yeah, here's my stats today trading on Apex. Now we were taking a little bit larger swings, but like, let me show you guys my graphs today. We did pretty well. Hopefully we can continue it. We ended up making about $1,100 net. So here's one of my graphs. You can check it out. Here's my profit graph. The biggest we were ever down was about 500, but you can see we rolled that up. Now we made about 1,100. With fees, or without fees, we made about 1,200 on Apex. Look at Amazon back up. We got about 15 minutes left. And you can see I was only about 60% accurate today. Like, here's my full stats. You know, my drawdown was about 740, which is, you know, my run up was about 1500. So like good ratios there. Only $130 in commissions out of about a $1,200 day. My net profit was about 1100, like I said. Yeah, total P&L about 1100. So not bad on Apex. Again, not bad. If you want the max discount, again, you can use my coupon code BT. BT will get you the max discount. You can check it out right here. When is Mother's Day? Let me see. Okay, it's May 12th. Super Micro is down to 790s. It's not looking great. It's not looking horrible either. No, the Amazon call is not until 5:30 market time. The reason you know this is because you'd be able to see. Let me make sure, but I'm almost certain. Yeah, so it's at 5:30. Like I'll wait, but yeah, it's at 5:30. It's not right now. Yeah, so the Amazon hasn't even started. They haven't even populated here. You can't use it 15 minutes. We still have 16 minutes left, so in about a minute, it'll let me access it. But yeah, the Amazon earnings call hasn't started yet. We got about 15 minutes. Yeah, I mean, Amazon is about 5% or so away from lifetime highs. If we look at Amazon right here, you know, lifetime highs are 190. We're at about 180, so we're about $10 away from lifetime highs. Yeah, so we're about like a little bit over 5%. We're like 6% away from lifetime highs, if my math is right. My little percentage calculation in my head. So from 180 to 190 would be like 6%, right? Yeah, 5.7%, right? Okay, my head math is correct. Top 3 head mathers in the world right now. I like candles. Look, I might hate to say it. You can make fun of me, but I like candles. But I heard candles aren't really good for you like that. Anybody have any recommendations for like some healthy candles I can keep in my office? My mom used to like candles, right? So it's, you know, but most candles are bad for you. Also, y'all join the stream tomorrow morning. So today, the reason we made this money, right? The reason we were able to make these gains today is because like we had this strategy, and the logic of it's very simple. With the FOMC meeting coming out, right? A lot of the time ahead of the meeting, we get choppy action. And so a lot of the time ahead of the meeting, we get choppy action. So when you know, and again, not only that, but today's a big day with big earnings. You know, a lot of choppiness can come from that. And so tomorrow, ahead of the FOMC meeting, I think we could get choppiness, right? That's what I'm expecting. And so with that, you know, we're going to get like a stare. Like if we move to the top of the range, we're going to short it. Bottom of the range, we're going to buy it. We're going to try to make another couple $1,000s tomorrow. Day trading on Apex. And so again, they are a sponsor, of course. I'm biased, like I always tell you guys, but still, I'm ready for that. We'll see how that goes. I guess beeswax candles is probably the best move, right? That can't be bad for you. No overnight ones, man. All right, guys. Hey, we got 12 minutes left. Let me see if I can access the Amazon call now. I'm pretty sure I can. Okay, yeah. Why is Meta crashing? I mean, tech is down. But Meta's up so much over the last few days that, like, I don't know if I'd call it crashing. Yeah, for sure, OG, 100%. We'll see if Amazon hits 200. It's possible it does. We'll see. It's gonna be May. Alright. Yeah, so they're extending the Apex sale through May. Alright, chat. 10 minutes. 10 minutes. Bullish or bearish on Amazon here. Yeah, Amazon had slightly lower guidance. It was like 0.1 difference, but... Alright, so we're gonna swap these headphones out. Alright, so did it connect? Let's see. Alright, there we go. So let me know if you can hear the music now. Yeah, I mean, Watch Geek, you know, never mind. So, I know you're not a watch geek because, never mind. So, like, why create a username if you're not really one? I mean, no offense to you, but, like, that seems a little off. Like, you know, and again, I got people who are just kind of, like, weird, and they create all these different usernames trying to, like, I'm not going to say pander to me, but yeah, you know. So, like, and you probably did some Google searches real quick, maybe. Like, I don't know. Never mind. Hey, we got 7.5 minutes, 8 minutes here. But there's something off with what you just said, and I'm not going to tell you what. And so why do that? Like, what's the point, you know? Maybe I just don't trust anybody. Meta actually bounced all the way back up to 430s right now. And now it's all the way back down to 427s. Yeah, 427s on Meta. So Meta bounced all the way back to 430, came all the way back down. Yeah, so I don't. It spiked. It just didn't hold. Now it's all the way back down here. Chat, we got 8 minutes here. Chat, can y'all hear the music? And maybe I'm just, you know, being overly critical. That's possible, I guess, too. But like, I don't know, man. I get too many people. All right, music is fine. I just want to make sure. You guys can hear me, and hear it when it comes out. So yeah, it's gonna be in about 6 minutes. Yeah, so the music is quiet, but that's all right. All right, chat. All right, guys, here we go. Yeah, a lot of stuff had good runs, and stuff's still down, though. Yeah, I don't know who that is. Nick Merck or whomever, I don't know. Is that like a gamer? Sounds like one. I feel like I've heard that name before, I just don't know where. Calling them watches just feels trashy? Call it a watch? That's like me saying, hey, you know, calling my television a television just feels trashy. I'm gonna call it a... I don't even know what to say there. But that's my point. And like, I don't even know what else to call it. It's a watch. You don't want me to call it a watch, bro? I'm just kind of messing with you a little bit. But I think justifiably so. Electronic thingy on my wrist that tells me the time, sir. You know, maybe not electronic. Mechanical thing on my wrist that specifies what time it is. I kind of get what you're saying, though. But still, I'm just kind of messing with you. All right, guys. I've been sitting here for too long, to be honest. You know. I got your pawn. Viewing receptacle, yeah. Nah, I'm just messing with it. I just couldn't imagine how saying watch would be trashy. I don't know, you know. Anyways, it's all good. I get what you mean though. I kind of get it. Like timepiece is definitely a classier way to say it, but it's all good, dude. It doesn't matter. You know? Pocket watches, dude. In 5th grade, man, I used to rock a freaking wallet chain and a pocket watch. It was Jinkos. I had Jinkos. I listened to Limp Bizkit, you know, Linkin Park. Had some really, really, really baggy pants on, and I had a wallet chain and a watch. I was just basically the coolest kid on the block, you know. Yeah, I don't know about Amazon and AMD at the open. All right, chat. Hey, we got 2 minutes. 2 minutes. Be ready. Ooh, I got some ribs. I'm about to go eat. All right, guys. Here we go. All right, we're gonna put the Amazon trend up here. All right, we're at 180s. Yeah, Bitcoin craziness. Super weak, man. Super weak at 60K. Been consolidating around that level for a while. Do you think it holds support? Are you a Fedora kind of guy? No, of course not. I mean, listen, some people can rock a fedora and get away with it. I personally am not one of those guys. I also have found that fedoras are kind of like girl repellent, personally. But again, that's just me. Some people can get away with it, you know. I think my friend can get away with, like, my friend wears one sometimes, but I can't personally get away with it. Again, yeah. Hey, we got 40 seconds left, chat. Be ready. Here, let me turn the music off. Y'all can hear the music though. You said correct. Let's do this. Let me exit out of all this stuff. All right, here, you guys ready? All right, I'm gonna mute this sound in the background and start it right when it starts. Start it right when it starts. Hey. All right, so we're here. When it's ready, just let me know. Again, we're live right now.
For standing by. Good day, everyone, and welcome to the Amazon.com First Quarter 2024 Financial Results Teleconference.
Let me know if the sound is good.
At this time, all participants are in a listen-only mode. After the presentation, we will conduct a question-and-answer session. Today's call is being recorded. And for opening remarks, I will be turning the call over to the Vice President of Investor Relations, Mr. Dave Files. Please go ahead.
Hello, and welcome to our Q1 2024 Financial Results Conference Call. Joining us today to answer your questions is Andy Jassy, our CEO, and Brian Olsavsky, our CFO. As you listen to today's conference call, we encourage you to have our press release in front of you, which includes our financial results as well as metrics and commentary on the quarter. Please note, unless otherwise stated, all comparisons in this call will be against our results for the comparable period of 2023. Our comments and responses to your questions reflect management's views as of today, April 30th, 2024 only, and will include forward-looking statements. Actual results may differ materially. Additional information about factors that could potentially impact our financial results is included in today's press release and our filings with the SEC, including our most recent annual report on Form 10-K and subsequent filings. During this call, we may discuss certain non-GAAP financial measures. In our press release, slides accompanying this webcast, and our filings with the SEC, each of which is posted on our IR website, you will find additional disclosures regarding these non-GAAP measures, including reconciliations of these measures with comparable GAAP measures. Our guidance incorporates the order trends that we've seen to date and what we believe today to be appropriate assumptions. Our results are inherently unpredictable and may be materially affected by many factors, including fluctuations in foreign exchange rates, changes in global economic and geopolitical conditions and customer demand and spending, including the impact of recessionary fears, inflation, interest rates, regional labor market constraints, world events, the rate of growth of the internet, online commerce, cloud services, and new and emerging technologies, and the various factors detailed in our filings with the SEC. Our guidance assumes, among other things, that we don't conclude any additional business acquisitions, restructurings, or legal settlements. It's not possible to accurately predict demand for our goods and services, and therefore our actual results could differ materially from our guidance. And now, I'll turn the call over to Andy.
Thanks, Dave. Today we're reporting $143.3 billion in revenue, up 13% year over year, excluding the impact from foreign exchange rates. $15.3 billion in operating income, up 221% year over year, or $10.5 billion. And $48.8 billion in trailing 12-month free cash flow adjusted for equipment finance leases, up $53.2 billion year over year. We remain focused on driving better experiences for our customers while also delivering efficiency improvements. Our financial results are an encouraging reminder of the progress we're making. Starting with our stores business, despite having hundreds of millions of items and the broadest selection available, we remain intensely focused on adding even more selection. One way is to continue adding brands we know our customers want. For instance, in the U.S., we recently welcomed Clinique and two Gen Z fashion favorites, Parade and Cider, and announced a collaboration with Hardly Ever Worn It in Europe to offer customers pre-owned items from luxury brands. Another way to drive selection is to make it easier for our third-party sellers to add their products to our store. We've recently launched a new generative AI tool that enables sellers to simply provide a URL to their own website, and we automatically create high-quality product detail pages on Amazon. Already, over 100,000 of our selling partners have used one or more of our Gen AI tools. We remain focused on making sure we're offering everyday low prices, which we know is even more important to our customers in this uncertain economic environment. As our results show, customers are shopping but remain cautious, trading down on price when they can, and seeking out deals. In Q1, we helped customers save with shopping events worldwide, including our first big spring sale in Canada and the US. We also held spring deal days in Europe and a Ramadan event in Egypt, Saudi Arabia, and the UAE. Delivery speed really matters to customers, and we've continued to get faster while improving our safety performance. In this past Q1, we delivered to Prime members at our fastest speeds ever. In March, across our top 60 largest U.S. metro areas, nearly 60% of Prime members' orders arrived the same or next day. And globally, in cities like Toronto, London, and Tokyo, about 3 out of 4 items were delivered the same or next day. Faster delivery times have another important effect. As we get items to customers this fast, customers choose Amazon to fulfill their shopping needs more frequently, and we can see the results in various areas, including how fast our everyday essentials business is growing and the continued increase in Prime member purchase frequency and total spend with us. Over the past year, we've talked about how our regionalization efforts have helped lower our cost to serve. We've continued to inspect our fulfillment network for additional opportunities and are working on several areas where we believe we can lower costs even further while also improving customer experience. One example of this is our work to increase the consolidation of units into fewer boxes. As we further optimize our network, we've seen an increase in the number of units delivered per box, an important driver for reducing our costs. When we're able to consolidate more units into a box, it results in fewer boxes and deliveries, a better customer experience, reduces our cost to serve, and lowers our carbon impact. Another prominent example is our efforts to revamp our U.S. inbound fulfillment architecture to allow for better inventory placement closer to our customers. This will be an iterative process throughout the year as we work with sellers and retail partners, and teams are making good progress on their plans. Advertising performance remains strong, with ad sales up 24% year over year, excluding the impact of foreign exchange. The strength in advertising was primarily driven by sponsored products, supported by continued improvements in relevancy and measurement capabilities for advertisers. We still see significant opportunity ahead in our sponsored products, as well as areas where we're just getting started, like Prime Video ads. Prime Video ads offers brands values we can better link the impact of streaming TV advertising to business outcomes, like product sales or subscription signups, whether the brands sell on Amazon or not. It's very early for streaming TV ads, but we're encouraged by the early response. Moving to AWS, year-over-year revenue growth accelerated to 17.2% in Q1, up from 13.2% in Q4. It's useful to remember that year-over-year percentages are only relevant relative to the total base from which you start. And given our much larger infrastructure cloud computing base, at this growth rate, we see more absolute dollar growth again quarter over quarter in AWS than we can see elsewhere. We're seeing a few trends right now. First, companies have largely completed the lion's share of their cost optimization and turned their attention to newer initiatives. Before the pandemic, companies were marching to modernize their infrastructure, moving from on-premises infrastructure to the cloud to save money, innovate at a more rapid rate, and to drive more developer productivity. The pandemic and uncertain economy that followed distracted from that momentum, but it's picking up again. Companies are pursuing this relatively low-hanging fruit of modernizing their infrastructure, and with the broadest functionality by a fair bit, deepest partner ecosystem, and strongest security and operational performance, AWS continues to be their strong partner of choice. Our AWS customers are also quite excited about leveraging Gen AI to change their customer experiences and businesses. We see considerable momentum on the AI front, where we've accumulated a multi-billion-dollar revenue run rate already. You've heard me talk about our approach before, and we continue to add capabilities at all 3 layers of the Gen AI stack. At the bottom layer, which is for developers and companies building models themselves, we see excitement about our offerings. We have the broadest selection of NVIDIA compute instances around, but demand for our custom silicon, Trainium and Inferentia, is quite high given its favorable price-performance benefits relative to available alternatives. Larger quantities of our latest generation Trainium 2 is coming in the second half of 2024 and early 2025. Companies are also starting to talk about the eye-opening results they're getting using SageMaker. Our managed end-to-end service has been a game changer for developers in preparing their data for AI, managing experiments, training models faster, lowering inference latency, and improving developer productivity. Perplexity AI trains models 40% faster in SageMaker. Workday reduces inference latency by 80% with SageMaker, and NatWest reduces its time to value for AI from 12 to 18 months to under 7 months using SageMaker. This changes how challenging it is to build your own models, and we see an increasing number of model builders standardizing on SageMaker. The middle layer of this stack is for developers and companies who prefer not to build models from scratch, but rather seek to leverage an existing large language model, or LLM, customize it with their own data, and have the easiest and best features available to deploy secure, high-quality, low-latency, cost-effective production Gen AI apps. This is why we built Amazon Bedrock, which not only has the broadest selection of LLMs available to customers, but also unusually compelling model evaluation, retrieval augmented generation, or RAG, to expand models' knowledge base, guardrails to safeguard what questions applications will answer, agents to complete multi-step tasks, and fine-tuning to keep teaching and refining models. Bedrock already has tens of thousands of customers, including Adidas, New York Stock Exchange, Pfizer, Ryanair, and Toyota. In the last few months, Bedrock's added Anthropic's Claude 3 models, the best-performing models on the planet right now, Meta's Llama 3 models, Mistral's various models, Cohere's newest models, and new first-party Amazon Titan models. A week ago, Bedrock launched a series of other features, but perhaps most importantly, custom model import. Custom model import is a sneaky big launch as it satisfies a customer request we've heard frequently and that nobody has yet met. As increasingly more customers are using SageMaker to build their models, they're wanting to take advantage of all the Bedrock features I mentioned earlier that make it so much easier to build high-quality production-grade Gen AI apps. Bedrock Custom Model Import makes it simple to import models from SageMaker or elsewhere into Bedrock before deploying their application. Customers are excited about this, and as more companies find they're employing a mix of custom-built models along with leveraging existing LLMs, the prospect of these two linchpin services in SageMaker and Bedrock working well together is quite appealing. The top of the stack are the Gen AI applications being built, and today we announced the general availability of Amazon Q, the most capable generative AI-powered assistant for software development and leveraging companies' internal data. On the software development side, Q doesn't just generate code, it also tests code, debugs coding conflicts, and transforms code from one form to another. Today, developers can save months using Q to move from older versions of Java to newer, more secure and capable ones. In the near future, Q will help developers transform their .NET code as well, helping them move from Windows to Linux. Q also has a unique capability called agents, which can autonomously perform a range of tasks, everything from implementing features, documenting, and refactoring code to performing software upgrades. Developers can simply ask Amazon Q to implement an application feature, such as asking it to create an Add to Favorites feature in a social sharing app, and the agent will analyze their existing application code and generate a step-by-step implementation plan, including code changes across multiple files and suggested new functions. Developers can collaborate with the agent to review and iterate on the plan, and then the agent implements it, connecting multiple steps together and applying updates across multiple files, code blocks, and test suites. It's quite handy. On the internal data side, most companies have large troves of internally relevant data that resides in wikis, internet pages, Salesforce, storage repositories like Amazon S3, and a bevy of other data stores and SaaS apps that are hard to access. It makes answering straightforward questions about company policies, products, business results, code, people, and many other topics hard and frustrating. Q makes this much simpler. You can point Q at all of your enterprise data repositories, and it'll search all this data, summarize logically, analyze trends, and engage in dialogue with customers about this data. We also introduced today a powerful new capability called Q Apps, which lets employees describe in natural language what apps they want to build on top of this internal data, and Q Apps will quickly generate that app. This is going to make it so much easier for internal teams to build useful apps from their own data. Q is not only the most functionally capable AI-powered assistant for software development and data, but also setting the standard for performance. Q is the highest known score and acceptance rate for code suggestions, outperforms all other publicly benchmarkable competitors on catching security vulnerabilities, and leads all software development assistants on connecting multiple steps together and applying automatic actions. Customers are gravitating to Q, and we already see companies like Brightcove, British Telecom, Datadog, GitLab, GoDaddy, National Australia Bank, NCS, NetSmart, Slalom, Smartsheet, Sun Life, Tata Consultancy Services, Toyota, and Wiz using Q. And we've only been in beta till today. I'd also caution folks not to overlook the security and operational performance elements of these Gen AI services. It's less sexy, but critically important. Most companies care deeply about the privacy of the data in their AI applications and the reliability of their training and production apps. If you've been paying attention to what's been happening the last year or so, you can see there are big differences between providers on these dimensions. AWS has a meaningful edge, which is adding to the number of companies moving their AI focus to AWS. We expect the combination of AWS's re-accelerating growth and high demand for Gen AI to meaningfully increase year-over-year capital expenditures in 2024, which, given the way the AWS business model works, is a positive sign of the future growth. The more demand AWS has, the more we have to procure new data centers, power, and hardware. And as a reminder, we spend most of the capital up front, but as you've seen over the last several years, we make that up in operating margin and free cash flow down the road as demand steadies out. And we don't spend the capital without very clear signals that we can monetize it this way. We remain very bullish in AWS. We're at a $100 billion plus annualized revenue run rate, yet 85% or more of the global IT spend remains on premises. And this is before you even calculate Gen AI, most of which will be created over the next 10 to 20 years from scratch and on the cloud. There is a very large opportunity in front of us. We also continue to make strong progress on our newer investments. Our emerging international stores are growing and moving towards profitability. Our third-party logistics business, offering services like Buy with Prime, Amazon Shipping, and multi-channel fulfillment, continues to grow well. We just launched a Prime delivery grocery benefit that lets customers receive free unlimited grocery delivery for just $9.99 a month, which is great value, and customers are responding accordingly. Later this year in Manhattan, we're launching a new, smaller Whole Foods Market concept called Whole Foods Market Daily Shop. Prime Video continues to produce compelling content, with Fallout being our latest big hit on the heels of the very successful Roadhouse movie, with strong customer engagement in our original and partner content. Our health services business is growing robustly as customers are loving our pharmacy customer experience, and we've launched same-day delivery of prescription medications to customers in 8 cities, including Los Angeles and New York City, with plans to expand to more than a dozen cities by the end of the year, with customers now getting first fill medications 75% faster year over year nationwide. And Kuiper is getting closer to having its production satellites in space and entering our commercial beta. There's a lot of invention happening across our business, and I'm super grateful to all our employees for their hard work and ingenuity. I'll close by sharing that I'm enthusiastic about how we started this year. We have a lot of opportunity in front of us in every one of our businesses to make our customers' lives better and easier. With that, I'll turn it over to Brian for a financial update.
Thanks, Andy. Starting with our top-line financial results. Worldwide revenue was $143.3 billion, representing a 13% increase year over year, excluding the impact of foreign exchange, and near the top end of our guidance range. I'd like to highlight a couple points to help you interpret our growth rates. First, we saw an impact from leap year in Q1, which added approximately 120 basis points to the year-over-year quarterly revenue growth rate. Second, while I typically talk about growth rates excluding the impact of year-over-year changes in foreign exchange, we did see an unfavorable impact from global currencies weakening against the US dollar more than we had planned in Q1. This led to a $700 million or 50 basis point headwind to revenue relative to what we guided. Excluding this FX headwind, we would have exceeded the top end of our guidance range. Worldwide operating income was $15.3 billion, which was our highest quarterly income ever. And it was $3.3 billion above the high end of our guidance range. This was driven by strong operational performance across all 3 reportable segments and better than expected operating leverage, including lower cost to serve. The impact on operating income from our Q1 FX rate headwind was negligible. I'll speak more to our profitability trends in a moment. In the North America segment, first quarter revenue was $86.3 billion, an increase of 12% year over year. In the international segment, revenue was $31.9 billion, an increase of 11% year over year, excluding the impact of foreign exchange. We remain focused on the inputs that matter most to our customers: selection, price, and convenience. During the quarter, around the world, we helped customers save with our shopping events. We added selection, including premium and luxury brands, and we delivered at our fastest speeds ever for Prime members. Third-party sellers continue to be an important part of our offering. Third-party seller services revenue increased 16% year over year, excluding the impact of foreign exchange. We saw strong 3P unit growth, coupled with increased adoption of our optional services such as fulfillment and global logistics. For the quarter, third-party seller unit mix was 61%, up 200 basis points year over year. Shifting to profitability, North America segment operating income was $5 billion, an increase of $4.1 billion year over year. Operating margin was 5.8%, up 460 basis points year over year. We saw improvements in our cost to serve, including continued benefit from our work to regionalize our operations, savings from more consolidated customer shipments, and improved leverage driven by strong unit growth and lower transportation rates. In our international segment, operating income was $903 million, an improvement of $2.2 billion year over year. Operating margin was 2.8%, up 710 basis points year over year. This is primarily driven by our established countries as we improve cost efficiencies through network design enhancements and improved volume leverage. Additionally, we saw good progress in our emerging countries as they expand their customer offerings and make strides on their respective journeys to profitability. Looking ahead, we see several opportunities to further lower cost to serve and improve profitability in our worldwide stores business while still investing to improve the customer experience. Within our fulfillment network, we are focused on investing in our inbound network, streamlining and standardizing process paths, and adding robotics and automation. These improvement opportunities will take time. However, we have a solid plan in place and we like the path we are on. Advertising remains an important contributor to profitability in North America and international segments. We see many opportunities to grow our offerings, both in the areas that are driving growth today, like sponsored products, and in areas that are newer, like streaming TV ads. Moving to AWS, revenue was $25 billion, an increase of 17% year over year, and AWS is now a $100 billion annualized revenue run rate business. Excluding the impact from leap year, AWS revenue increased approximately 16% year over year. During the first quarter, we saw growth in both generative AI and non-generative AI workloads across a diverse group of customers and across industries, as companies are shifting their focus towards driving innovation and bringing new workloads to the cloud. Additionally, we continue to see the impact of cost optimizations diminish. While there will always be a level of ongoing optimization, we think the majority of the recent cycle is behind us, and we're likely closer to a steady state of these optimization efforts. AWS operating income was $9.4 billion, an increase of $4.3 billion year over year. As a reminder, these results include the impact from the change in the estimated useful life of our servers, which primarily benefits the AWS segment. We made progress in managing our infrastructure and fixed costs while still growing at a healthy rate, which has resulted in improved leverage. As we've said in the past, over time we expect the AWS operating margins to fluctuate, driven in part by the level of investments we are making in the business. We remain focused on driving efficiencies across the business, which enables us to invest to support the strong growth we're seeing in AWS, including generative AI, which brings us to capital investments. As a reminder, we define these as the combination of CapEx plus equipment finance leases. In 2023, overall capital investments were $48.4 billion. As I mentioned, we're seeing strong AWS demand in both generative AI and our non-generative AI workloads, with customers signing up for longer deals and making bigger commitments. Still relatively early days in generative AI and more broadly the cloud space, and we see sizable opportunity for growth. We anticipate our overall capital expenditures to meaningfully increase year-over-year in 2024, primarily driven by higher infrastructure CapEx to support growth in AWS, including generative AI. Turning to our revenue guidance for Q2, net sales are expected to be between $144 billion and $149 billion, or to grow between 7% and 11% compared with the second quarter of 2023. We saw an unfavorable impact from year-over-year changes in foreign exchange in our Q1 results, and we expect that headwind to grow in the second quarter. Our Q2 net sales guidance anticipates an unfavorable foreign exchange impact of approximately 60 basis points. As part of our guidance considerations, we also continue to keep an eye on consumer spending and macro-level trends, specifically in Europe, where it appears to be a bit weaker relative to the U.S. Operating income is expected to be between $10 billion and $14 billion in Q2. This estimate includes the impact of our seasonal step-up in stock-based compensation expense, driven by the timing of our annual compensation cycle. I want to thank our customers, our partners, and our teammates around the world for a very strong start to the year, and we're excited to build on this momentum. We'll remain focused on streamlining and prioritizing projects in a way that allows us to continue inventing for customers in a cost-effective way. With that, let's move on to your questions.
At this time, we will now open the call up for questions. We ask each caller to please limit yourself to one question. If you would like to ask a question, please press star one on your telephone keypad. We ask that when you pose your question, you pick up your handset to provide optimum sound quality. Once again, to initiate a question, please press star, then one on your touch-tone telephone at this time. Please hold while we pull for questions. Thank you. Our first question comes from the line of Doug Anmuth with JP Morgan. Please proceed with your question.
Thanks so much for taking the question. Probably for both Andy and Brian. Historically, Amazon has shifted between periods of heavy investment and then margin expansion and back into heavier investment, but you now have a much bigger base of gross profit and overall operating income. As you think about Gen AI and capital intensity or grocery or Kuiper or healthcare, is there anything from an investment perspective that could materially impact profitability going forward in your view? Thanks.
Hi, Doug. Yeah, we have historically always mentioned that, and you have seen like a pendulum shift sometimes between profitability and investment. I think we're at the stage now where we're doing both at the same time continually. So we are more apt to talk about the specific investments that we're making and how that might impact our short-term outlook. So if you look at the progress we made on operating income and free cash flow over really the last 18 months, a lot of it's driven by improvements in our stores business, lower cost to serve. We've talked about regionalization efforts and how that's moving into inbound areas now. Advertising has been growing strong, and AWS has been strong, and you even saw AWS margins increase 800 basis points sequentially off Q4. A lot of that's driven by cost controls and expanding revenue on the top line and lower cost structure throughout the company. We do see, though, on the CapEx side that we will be meaningfully stepping up our CapEx, and the majority of that will be in our to support AWS infrastructure and specifically generative AI efforts. So I would expect that will increase. It will increase depreciation definitely in that segment. On the when we're talking about CapEx right now, in Q1 we had $14 billion of CapEx. We expect that to be the low quarter for the year. As Andy said earlier, we are seeing strong demand signals from our customers and longer deals and larger commitments, many with generative AI components. So those signals, are giving us confidence in our expansion of capital in this area. And as he also mentioned, we've done this for 18 years. We invest capital and resources up front. We create capacity very carefully for our customers, and then we see the revenue, operating income, and free cash flow benefit for years to come after that with strong returns on invested capital. So a little bit of a long-winded answer to your question, but yes, we have but the issue that we'll see in the near term is additional CapEx, and we've talked about that. And we continue to see, strong CapEx performance in our stores business. Most of that will be related to modest capital or capacity increases, additions to our same-day fulfillment network, and some Amazon logistics upgrades to the fleet. But for the most part, what you'll see is really going to be on the AWS side.
Yeah, I just would add briefly, just to summarize. I understand where the question's coming from, Doug, and I think we're in a position to do both. Is the short answer. I think there's actually an opportunity in our existing large businesses and the stores business, along with advertising and AWS. There's a lot of growth in front of us, and I think we're investing in a meaningful way. But I think we also, as we've been pretty consistent about, don't believe that we're at the end of what we can do in terms of improving our cost structure on the stores side. Yeah, I think there are really unbelievable growth opportunities in front of us. And I think what people sometimes forget on the AWS side, it's a $100 billion revenue run rate business that where still 85+% of the global IT spend is on premises. And if you believe that equation is going to flip, which we do, it means we have a lot of growth in front of us, and that's before the generative AI opportunity, which I don't know if any of us have seen a possibility like this in technology in a really long time. For sure since the cloud, perhaps since the internet. And unlike in the cloud, where so much there's a lot of work to be done to move from on-premises to the cloud. People do it and they get value out of it, which is why they modernize their infrastructure. But it's work. All of this generative AI set of workloads, which will transform every experience, are going to be built from scratch on the cloud, largely. And so it's just tremendous opportunities there, along with some of the other areas that we're investing that are really early stage. So I think it's both for us.
And our next question comes from the line of Ross Sandler with Barclays. Please proceed with your question.
Hey guys, somewhat related question on CapEx intensity in AWS. So I think the CEO of Anthropic has said that I think the next generation of models cost in the neighborhood of $1 billion to train. This would be like Claude 4, I guess, high end. And then the generation after that might be as much as $10 billion to train. So is this something that you feel like the industry will do on top of AWS? Do you feel like Olympus and some of the stuff you're doing in-house needs to kind of stay at the state of the art, or can others do that? And then how much did all this training have an impact on the acceleration that you saw in 1Q for AWS revenue? Thank you.
Well, Ross, I would tell you that we have seen kind of three, I'll call it macro trends that I think are contributing to AWS's performance, at least in the last quarter. I think, first of all, I think the lion's share of cost optimization is behind us. I think companies will be smart and have learned a lot over the last number of months in how they run their infrastructure in the cloud. But I think the lion's share of the cost optimization is behind us. And I think people have moved to newer initiatives that I would, at a macro level, describe as modernizing their infrastructure and then trying to drive value out of generative AI. On the former, I think we were on this march before the pandemic where most companies were trying to figure out how to move from on-premises to the cloud because it's more cost-effective and it's faster to innovate and they get real developer productivity. And then the pandemic hit and people were in survival mode, and then the uncertain economy led people to save costs wherever they could, and they got distracted on that. But they're back to pursuing and figuring it out because it's low-hanging fruit for them, and we see very significant growth in that space. And at the same time, we're seeing very significant momentum in people trying to figure out how to run their generative AI on top of AWS. I mentioned we have a multi-billion-dollar revenue run rate that we see in AI already, and it's still relatively early days. And I think that there's, at a high level, there's a few things that we're seeing that's driving that growth. I think, first of all, there are so many companies that are still building their models, and these range from the largest foundational model builders like Anthropic, you mentioned, who every 12 to 18 months are building new models. And, those models consume an incredible amount of data with a lot of tokens, and they're significant to actually go train. And a lot of those are being built on top of AWS, and I expect an increasing amount of those to be built on AWS over time because our operational performance and security, and as well as our chips, both what we offer from NVIDIA, but if you take Anthropic as an example, they're training their future models on our custom silicon on Trainium. And so I think we'll have a real opportunity for a lot of those models to run on top of AWS. I think the thing that people sometimes don't realize is that while we're in the stage that so many companies are spending money training models, once you get those models into production, which not that many companies have, but when you think about how many generative AI applications will be out there over time, most will end up being in production when you see the significant run rates. You spend much more in inference than you do in training because you train only periodically, but you're spitting out predictions and inferences all the time. And so we also see quite a few companies that are building their generative AI applications to do inference on top of AWS. And a lot of that has to do with the services. And, the primary example we see there is how many companies, tens of thousands of companies already are building on top of Amazon Bedrock, which has the largest selection of large language models around and a set of features that make it so much easier to build a high-quality, cost-effective, low-latency, production-grade generative AI application. And so we see both training and inference being really big drivers on top of AWS. And then you layer on top of that the fact that so many companies, their models and these generative AI applications are going to have the most sensitive assets and data, and it's going to matter a lot to them what kind of security they get around those applications. And if you just pay attention to what's been happening over the last year or two, not all the providers have the same track record, and we have a meaningful edge on the AWS side, so that as companies are now getting into the phase of seriously experimenting and then actually deploying these applications to production, people want to run their generative AI on top of AWS.
And the next question comes from the line of Brian Nowak with Morgan Stanley. Please proceed.
Great. Thanks for taking my questions. I have two. The first one is on cost to serve. I appreciate all the color in the shareholder letter and even tonight on cost to serve. Andy, maybe could you just help us quantify a little more how to think about some of your North Star cost to serve goals over the next couple of years, and what could that mean for potential accompanying reasonable ranges of outcomes for North America retail margins through all of that? And then the second one, if cost to serve does improve, I think it should lead to significant incremental cash flow, even with more CapEx. So just remind us again how you sort of think through the philosophy of returning capital to shareholders in addition to continue to invest for the long run. Thanks.
Hey, Brian, this is Brian. I will start with your second question. So as far as dividends or buybacks or any other capital structure moves, we don't have anything to share with you on that today. But, I'll reacquaint you with our general philosophy. So our first priority is to invest in to support the growth opportunities and long-term investments within our businesses. And generally, we still have many opportunities to put that capital to use that would generate meaningful returns, especially as you've heard in generative AI. So, we're we have a great deal of passion on that and conviction on that as well. We are reaching a different stage of free cash flow. As you mentioned, we had negative free cash flow for 2 years, 21 and 22, immediately after the pandemic, as we had doubled the size of our operations network and had a lot of other expenses. That was followed by 2023 when we had our highest free cash flow ever. So, and those trends have carried into Q1. So we feel good about the free cash flow. We are, again, still anticipating a higher CapEx this year. The other thing that we're doing with cash flow right now is we're repaying some of the debt that we had taken on during that negative free cash flow period. We had reached a high water mark at the end of Q1 last year, And since then, and then through this year, we'll pay that down over $25 billion. So that's our first priority, as well as 2024 capital expenditures. But otherwise, nothing to share on that front. I'll tee up Andy on the storage profitability because I know there's always generally the comment about how high can operating margins go and how do they compare to historic trends. And I think the same still holds. We look back to before the pandemic and we say, first, we can achieve those operating margins even without the impact of advertising. And we're not quite there yet, but we're not limiting ourselves to that. We're looking for ways to, again, turn over every rock, look at every process and everything that we do on the logistics side, and see how can we get our cost structure down, and how can we get speed up and selection up. So it's working on a lot of fronts there, but cost is certainly front and center as we meet and improve customer experience.
And the next question comes from the line of Youssef Squali with Truist Securities. Please proceed.
Great. Thank you very much. Andy, on logistics, in September, you launched Amazon Supply Chain. Can you just help us understand the opportunity you see there? Where are you in that journey to build logistics as a service on a global basis? And does that require a step function increase in CapEx? Thank you.
Yeah, thanks for the question, Yusuf. I think that it's interesting what's happening with our the business we're building in third-party logistics, and it really kind of in some ways mirrors some of the other businesses we've gotten involved in. AWS being an example of it, even though they're very different businesses. In that we realized that we had our own internal need to build a bunch of these capabilities, and we figured that there were probably others who had those same needs, and we decided to build services out of them. So, as our business has grown, it turns out to be pretty hard work to actually import items from overseas, get them through customs and through the border, and then ship them from that point to various facilities. And then it turns out that you don't want to store those facilities in fulfillment centers because that space is really scarce. So you'd like to have them in upstream storage facilities that are very inexpensive. And then you'd like to have a way to be able to know when your more scarce supply in the fulfillment centers needs replenishment and be able to do it automatically from those upstream storage facilities. And so all of those were capabilities that we had to build for ourselves to be able to operate our stores business in the way that we wanted to and that our sellers wanted to. And so we built that capability for ourselves first, and then we opened up those services as individual services to our sellers. And so we help sellers. We have a service that allows them to get items through the border and through customs. We have a service that allows them to ship from customs to various facilities, whether they're our own or theirs, separate ones. We allow them to store items in our upstream, low-cost warehouses that they can either automatically replenish into our fulfillment centers where we ship, or they can move to other facilities that they have. We have a service that lets them, where we'll ship either to our end customers if they're selling on Amazon or to their end customers. We obviously have Buy with Prime, where we enable our Prime customers to be able to buy from our third-party Buy with Prime sellers' websites, which increases their conversion 25% versus what they would do on their own, and it's a great benefit for our Prime customers. And then I would say that supply chain with Amazon is really an abstraction on top of those individual building block services I just mentioned that makes it easier for customers to have the whole end-to-end supply chain integrated. That collective set of businesses is growing very significantly. It's already what I would consider a reasonable sized business. And I think it's just really early days. It is not something that we anticipate being a giant capital expense driver for us. We have to build a lot of those capabilities anyway to handle our stores business, and we think we can, it'll be a modest increase on top of that to accommodate third-party sellers. But our third-party sellers find high value in us being able to manage those components for them versus having to do it themselves, and they save money in the process.
And our next question comes from the line of Justin Post with Bank of America. Please proceed with your question.
Great. I'd like to ask a couple growth drivers that you mentioned. First, grocery. It seems like, you're still changing the thresholds for free delivery or the subscription prices. Just can you say at all how much that's contributing to your growth right now? And do you think you're over the hump, or are you optimistic this can be a really big category for you? And then maybe a little bit extra on Prime Video ramp, how that ramp went versus your expectations, and do you think that could be a meaningful contributor to ad revenues, going forward? Thank you.
Yeah, I'll take them in opposite order, just on Prime Video ads. Very early days, just launched it a few months ago. It's off to a really good start. I think advertisers are excited about being able to expand their ability to advertise with us in video beyond Twitch and Freevee to Prime Video shows and movies. I think they also find that the relevancy and the measurability of that type of advertising in Prime Video ads is unique for them. So it's off to a very good start. It's early days, but we're optimistic there. On grocery, I would tell you that we continue to be optimistic about what we're doing in grocery. We have a very large grocery business. It's kind of got a few different components, and we have a very significant non-perishables grocery business, much the same way that the mass merchandisers entered this business 30 or 40 years ago. These are consumables and canned goods and pet food and healthcare and beauty products. That continues to grow at a very rapid rate. And we have an organic grocery business in Whole Foods Market, which is the pioneer in that space. And that business continues to grow very nicely. We're introducing a new, smaller format in the fall in Manhattan in the Whole Foods Market Daily Shop idea. We've worked very hard on the profitability trajectory over the last 18 months and like the way that has taken shape. And then if you want to serve as many grocery missions as we aim to serve, you have to have a perishables business and a mass physical presence. And that's what we've been working on with Amazon Fresh. We've launched our V2 format in physical stores over the last few months, primarily in Chicago and Southern California. We like the early results a lot. They're really meaningfully better in almost every dimension. It's still early, and there's some things to work through, but we like what we're seeing there. And and then we'd have to decide the best way to roll those out over time. As you mentioned, Justin, we just launched a Prime benefit for grocery, which is all-you-can-eat delivery for $9.99 a month, which if you order once from Whole Foods a month, it pays for itself, or once from Amazon Fresh for orders under $40, it pays for itself. It's a very valuable offering for our Prime members, and it's off to a great start. So, we have in my opinion, we have lots of ways that we can continue to help customers satisfy their grocery needs, and we have some building blocks that I think might also change how people split up their grocery orders over time. But I continue to be optimistic that that's going to continue to grow for us.
And our final question will come from the line of Ron Josey with Citi. Please proceed with your question.
Great. Thanks for taking the question. Maybe, Andy, I wanted to ask on international profitability, just after 1Q's 2.8% margin. Talk to us just about where we are in terms of international getting or to consistent profitability. We're following a similar trajectory as North America in terms of benefiting from regionalization shift, and we saw what average distance of each package traveled actually came down by 25 kilometers and whatnot. And if you could provide any insights on maybe how inbound fulfillment architecture might add to just continued benefits on faster shipping, same day, next day, et cetera. Thank you, Andy.
Hey, Ron, I'm going to start with this one on international profitability. So, yes, in the quarter, our operating income was $902 million. And if you've watched that, we've seen a steady progression in operating income in our international segment. It's up $2.2 billion year over year. So we like the trend there. It breaks down into a few areas. I would say the established countries of Europe, Japan, as well as the UK are following a lot of the same trajectory as in the United States. They are profitable in their own right. They are, adding selection. They're adding new features like grocery. They're adding to their Prime benefits. and a lot of the work that we do in the United States carries over there. The second group is the emerging countries, and of course we've launched 10 new countries in the last 7 years. Each of those has its own particular trajectory on profitability. The first thing we see there is having a good customer experience, having people sign up for Prime. A lot of times our Prime Video benefits help with that. Then work on our cost structure as we get scale, add advertising and other things, and eventually what we see is a break-even. Countries break even, and then they make positive income and free cash flow, and are more of a contribution to the positive contribution to the international segment. So we're seeing both the emerging and the established improving, and we like the trajectory, and I think you'll see more of it as we move forward.
Yeah, I would add a few things. I mean, I'm again quite bullish on our international stores business. It's already a very large business. We've added a number of countries that are on the right trajectory, as Brian just indicated, and it's going to be a big, profitable business for us, and I really like the direction it's headed. I'll take also just the second part of your question, just really around continuing to work on cost structure. I'd say, first of all, on the regionalization side, which we've talked a lot about the last year, it may sound a little boring to talk about because we talked about it a lot of times, but I just tell you that we're not done there. A lot of the work that we've done, we still have opportunities to refine and to get more value out of that. And a lot of what we learned on the regionalization side in the U.S. was in part inspired from what we saw in Europe, which in many ways is set up as a regional network because of the nature of how close those countries are to one another. And I would say we have also learned lessons from what we've done in the U.S. that we're going to be able to apply to our international operations as well. I think we see additional opportunities in all sorts of places, a good example of which is just how and where we inbound items to. The architecture we've had set up has largely had people inbounding to a couple places, and then we took, we spent a lot of effort and time and expense in breaking those down and shipping them to lots of other places. And we believe we can be much more efficient in how we use the inbound network and how we partner with our sellers. Part of what we did with our change in seller fees, we lowered the outbound fees in a meaningful way, but then we added an incentive for our sellers to inbound into locations that allow us to be more cost following and allow both our sellers and us to enjoy in those cost savings when we're able to do so. And we're seeing very optimistic signs there too. I think we're still early with respect to how we can continue to optimize the number of units per box, which has all sorts of good benefits. And then I'd just also say that it's been really interesting to watch the same day facilities evolution in our fulfillment network. And I think a lot of people have made the assumption over the last few years that faster speeds are going to mean higher costs, and that is not the case if you build the infrastructure with the right building blocks the way we have over the last couple of years. And our same day facilities are our least expensive facilities in the network. We still have a fraction of the number of those that we will have in the U.S. and that we'll have in other parts of the world, which will, again, both change our cost structure while increasing speed. So I don't think we're at the limits of what we can do. It's not going to all happen in 1 year. We're going to be working hard at this and inventing at this for several years, but I think we have a lot of upside in front of us.
Thank you for joining us on the call today and for your questions.
Okay, guys, so that is it for AMD's earnings. So, yeah, the forward PE is not 50. I mean, it might be 55 or whatever it is. Again, if you think the PE ratio is 300, again, it's very simple. Okay, so we can look at the last 4 quarters EPS ratio. The last one today was 62 plus 77, and this is the last 4 quarters. So it's not forward PE, which is using future times 58 is the last one, right? So the trailing 12-month EPS, the last 4 quarters, is 267. All right, 267. taking 147 divided by $2.67 is $55 PE ratio. Again, I'm not sure who genuinely thinks AMD has a PE of 300. That's ridiculous. Like, it's 55, right? If we look at their forward PE, which is looking at future guidance, like future EPS projections, I don't know what that is. That looks like it's like 48 or something, So again, it's not 300. It was never 300. I don't know why people say it's whatever. But anyways, if you want to check out my sponsors, check out Apex. Tomorrow's the FOMC meeting. And so we do have the FOMC meeting tomorrow. If you want to get 80% off and the 1-day pass for Apex, they give you a demo. They test your skill. If you pass the test, they fund you. If you don't pass the test, you're going to lose less than you would putting the money up yourself, most likely, right? The base one on Apex is $30. They give you a 25K demo. If you can make $1,500 in profit without losing that, they fund you 25K, 90% split. You make 10K afterwards. You get to keep 9 of that. Great way to learn how to day trade with limited risk. And if you lose, you're only out $30. But if you pass it, you get a 90% split. Great way to learn how to day trade in the futures market. You can day trade short, very similar to day trading stocks. You can day trade the SPY and Q price action and the E-mini and the NASDAQ. Check them out. Here's the link. They're a sponsor of mine. I'm biased because they pay me money, but you can check them out there. Again, great way to help support the channel. I'm going to get out of here, guys. Y'all be good. Yeah, Google Finance is wrong as well. So, again, look up how to calculate a PE ratio and then look at it. And then do what they just did. And tell me if it's 300. It's not. Anyways, y'all be good. I'll see you guys later. Y'all be safe. Have a great day, guys.